We can clap for them. You can just wave or stand. Thank you very much for being here with us. We have participants from South Korea. They will also have an opportunity to engage. All of these guests will be in the discussion and presentations, sharing experience. We have also participants from Malaysia. Thank you very much. We have participants from Eswatini. Thank you. We have, as we know, the chairperson who comes from Zambia. Welcome again. I think there was more than one person from Zambia. And we also have from Uganda, Karibu Sana. We have also a delegation from South Africa. Thank you very much. So you can see with all these number of countries and those in Tanzania, but we also have those who are coming from Kenya also as well. This is a very international event. So as we could hear from the discussion yesterday, the 20 years journey of the Higher Education Loans Board comes with a lot of achievements and success. The disbursement of the total amount of 8.2 trillion. For those who have been engaging in media last evening and this morning, among the headline in this nation has been about the celebration of the 20 years of the Higher Education Loans Board. And in this year alone, the disbursement will be up to 787 billion Tanzanian shilling. The loan board is really becoming more and more innovative, to be inclusive, to be efficient. So far, the gender balance for the disbursement, those who are benefiting the loans, is reaching 44%, and there are efforts even to increase more to have more gender balance. There is a transition process now to shift it from board to a fund, and this is an ongoing policy dialogue and decision process, which we will get to that point. But the Higher Education Loans Board of Tanzania is leading in Africa for a collection of the repayment of those installments which are due, up to 70%. But in the discussion throughout, there was a big call for collaboration and engagement of the private sector. So the Ministry of Education, Science and Technology is open for collaboration, but also to open up for any required policy space to ensure that the private sector is part of the participants in supporting the loans board, but also collaborating to ensure that it is working efficient, but also chipping in providing financing for students who are in the higher education sector. So this is also another very important area. We were also told that the loans board has gone digital from allocation to disbursement to repayment, and a recollection of the loans is done online. So there are systems which has been established, but even administrative activities of the loans board actually happen digitally. And I think with the enthusiasm of the tech by Dr. Bill Kiwia, who is the CEO, the Executive Director of the Higher Education Students Loans Board, I think there's more and more to come in terms of technology advancement and things like that. The guest of honor yesterday put a lot of emphasis for employers to support the repayment process. So this is an ongoing activity which needs, of course, there's a lot of innovation. There were even some ideas, for example, to collaborate more with local government authorities. But once employers are cooperating, I think it becomes much more easier for those who are supposed to repay the loans which they had benefited to pay and to enable others to access the service. We were also told that there has been some improvements in the widening of the scope from not only the higher education but also to the technical, so the mid-level TVET and the likes to also benefit. And this has started as one of the components of the loan disbursement, and it is growing over time. And so this is a very interesting area. And of course, there was a discussion and dialogue which should be ongoing in terms of the decision to allocate and disburse these resources to students using merit against the inclusion requirements. So we can keep on discussing and debating this particular interesting policy area. But I think the most important part is that we are also going to learn from the experience of other institutions. So one thing that we are going to learn today, agencies and organizations which are responsible for managing and governing higher education financing are not only just providing loans or grants to students or scholarships, they are doing other things which are associated or related. And this is an opportunity for us to learn about that today, and I think we will have that opportunity to learn more. So with that quick summary of what we have gone through in the first day, it is an opportunity time now to go into the second day, and as you have been briefed, we will have a bigger perspective in the global through a paper by the World Bank, and we can have a panel to discuss that, and later on we will have specific case experiences of countries from different continents, not only in Africa, and we will be able to learn from those, and we will also have time for panel discussion. Today we are not going to go all the way to the evening. I think we'll have a bit of a shorter day compared to yesterday, so we wish to have your attention and your active participation in our event. Thank you very much. You are welcome. So now I'd like to invite again Dr. Mari, who is going to be the moderator for this morning session, to continue now with the session. Asante sana. Let's clap for Dr. Mari.
Thank you. So for those who were not even attentive yesterday, they are able to take stock of what was discussed. But also, this brings us into context of what we want to discuss today, because as we said yesterday evening, that yesterday presentations were a foundation of what we want to discuss today. So allow me to call on stage Professor Jairus Matovelo. Our hands together for Professor Matovelo. Professor Matovelo is coming from the World Bank, and he's also in the forefront in implementation of the higher education transformation project. And among others, they are focusing into doing reforms, financing reforms in the education sector in Tanzania, be it infrastructure and many others. So he'll share with us the perspective of the World Bank into financing of higher education, and later we'll have a panel discussion for the same. You're welcome, Prof.
Is that,
yeah,
is that for
yes,
pushing forward?
yes, yes. But they can do it for you. You just tell them they can do it for you.
Okay. Good morning, ladies and gentlemen. I hope I can be heard. Okay. As I've been introduced, my responsibility is to make a presentation on global prospects on higher education financing, and hopefully in the process we have some ideas to take home for opportunities and strategies that may be applicable to Tanzania. Perhaps I should begin by saying that from the sessions we had yesterday, we can see that they underscored the consensus that financing for higher education has to keep on increasing, appropriately increasing according to the population growth, but also more appropriately according to the growth in GDP. economists are telling us that Africa is spending less than 1% on education, less than 1% of the GDP on education, whereas the global average stands at 2%. And this is happening at a time when the gross enrollment ratio for higher education in countries south of Sahara is again around 6 or less than 7, whereas the sub-Saharan Africa average is at 9+%. And in spite of that, it is still below the global average that stands at 38%. So we have a long journey to travel. So I'll be talking about global prospects, but more so referring to Africa. And to a large extent, because we are in Tanzania, we'll be giving some examples as far as Tanzania is concerned. We gathered from presentations of the sessions we had yesterday that higher education financing in Tanzania or globally is changing, and probably it will keep on changing. And this change is probably, or to a large extent, is invoked by rising demand and competing priorities on government financing, on public financing. There are also technological advancements which also affect financing in one way or the other, and also the shifting labor market needs towards higher skilled workers. This is the situation for most African countries and perhaps across the globe, and it affects Tanzania the same, and perhaps in some areas it's affected even more severely. And these constraints in higher education funding, as we may have gathered from some of the presentation yesterday, is attributed to shrinking public funding. We have gone away from days when higher education financing depended entirely on public financing, and to a large extent, even the higher education institutions themselves, they all were essentially public institutions. Now, this increasing in shift away from public finance is kind of invoking a new thinking, where if we used to get funds from the government and these do not appear to be covering all the needs, where else should we be looking for additional resources? And today we are looking at global initiatives and innovative financing models that can serve to bridge these emerging gaps. So this presentation essentially is a contribution, is one contribution in exploring ways to overcome the constraints that I have just alluded to. Next, yeah. We have to look at the state of demand for higher education, and this is kind of a way trying to also refer to some of the presentations we had yesterday. As the case for all other African countries, Tanzania is one of them, and the student demand for higher education keeps on surging. And this is also highlighted in the document on a continental education strategy for Africa, or of the AU. Now, for Tanzania, according to World Bank, the demand for higher education is expected to rise to as much as close to 600,000 students, as opposed to around 200 that were in place in 2020. That is in a span of 10 years, the demand for places of higher education will have more than doubled. And this is aggravated by the observation that the surge is due to a rapid population increase. As we have figures vary a little bit, sometimes you hear 77%, sometimes you hear 75% of populations in African countries being below the age of 35. And this is an age where people are building skills and trying to define themselves in terms of pursuit for careers, and therefore imposing a higher demand on higher education. The figures for Africa indicate the same, that in 10 years, over the same period, there may be a growth demand in higher education of more than, ranging from 116 to 150 plus. Now, given this situation, we have to look at factors that are fueling the higher demand for higher education. First, there is an issue of population. Young people in many emerging economies are demanding higher education, and this is kind of a spin-off from population growth, reduced child mortality, and increase in outputs from pre-university education. And there is a transformation of economies towards a more knowledge-based economy, and this also stretches the demand for higher education. There are advocacies across the globe advocating for more higher education, and also the fact that higher education is one investment that has got high returns on investments, and also the demand for skilled workforce in economies that are aspiring at industrialization. So what are the institutions and what are the funding agencies doing? When we look at financing for higher education, being in a symposium organized by Higher Education Students Loans Board, we are inclined to think more about financing students' studies at universities. But in addition to providing finances for students to be able to pursue their studies in universities, there has also got to be a matching increase in the capacities of universities to absorb these increasing numbers of students. And to that effect, a number of countries have put their higher education institutions on their tracks to strengthen the learning environment and increase their preparedness to absorb these populations that are expected to be coming. For case of Tanzania and the other countries in Africa, the World Bank has been supporting governments in higher education initiatives that are aimed at transforming education for respective transformation in their economies. In Tanzania, the HEET project is a case in point, and which is government, or it's a World Bank project supported by a loan from the World Bank to Tanzania, and is increasing the number of, let me put it this way. It is supporting higher education institutions to increase their capacity to absorb anticipated surges in student populations, but also to review their curricula so that they are aligned to the labor market needs. There was concern during the sessions yesterday by some students that, by some members over there, that they are concerned that a number of students that have qualifications are left out in university education because the seats in the universities to absorb them are not matching the demand. By the HEAT project that is being implemented by the Ministry of Education, Science and Technology, almost each one of the existing public universities will be establishing at least one additional university up country. For example, for University of Dar es Salaam, we'll be establishing university campuses in Lindi and I think in Bukoba, if my recollection is right. So those are the interventions or the preparations that governments are making in order to be able to absorb this surge of student populations into universities. Now, all these things are happening at a time when we are still far away from meeting the targets. As I alluded earlier, the target for most sub-Saharan, the situation for most sub-Saharan countries, sub-Saharan African countries, is at around 9%, whereas the global average, as I said earlier, is at 38%. So there is a journey to travel in raising the gross enrollment ratios of our universities in higher education. Now, this situation is occurring at a time when the financing for higher education from public has been shrinking, and we have to consider the factors that are responsible for this change. Of course, these include the economic challenges, the mismatch between the population growth and the GDP growth. There are also issues of competing priorities. And these are competing priorities at national level, but also at household levels. There are policy changes and shifting of parts or even all costs for higher education to parents, to private resources, and perhaps other philanthropic agencies. We have already alluded to the effect of population. Now, in financing higher education, I'll be looking at it as financing higher education institutions. And the financing higher education in terms of meeting the demands or the needs of the students will be implicit. Now, financing higher education in public higher institutions is slightly different from private universities. The public funding for higher education is mostly dedicated to public higher institutions. There are few exceptions to this, but as a rule, that has been the situation. And this has traditionally taken the form of direct government disbursements to higher learning institutions, or indirectly through sponsorships or loans to students through bodies like the Higher Education Students Loans Board. Now, when we look at government funding of higher education for most sub-Saharan African countries, we compare with the other countries elsewhere in the world. Public financing in sub-Saharan African countries is mostly targeting the central government. And yet, there are areas which could be explored and find out what contribution they could make to this effect. And this includes the local governments as well as the regional bodies. If you take, for example, for Tanzania, you would be looking forward to increase the contribution to higher education through the East African community, as is the case for countries in Europe where they have funding from governments, the national governments, but as well as, for example, the European Union, and also the regional or the local governments. But there is also another prospect to explore, and that is internally generated revenues. This is something that's more depended upon by private higher education setups than it is for public institutions. But I have observed through initiatives in the implementation of the HEAT project that even universities in Tanzania are making headways in this area. The internally generated revenue is a vital. I think you have gone one slide too far. Yeah, there. So the internally generated revenues are one additional prospect for financing higher education. And we have experiences from a few countries. In Nigeria, for instance, public universities are financing their university budgets by between 10 to 30%. And if you compare to private universities, they are funding between 93 to 100 of their costs from internally generated revenues. The issue here would be to encourage and inspire universities to strengthen their internal generated revenue initiatives, and this could be one source to support higher education financing. There is also a prospect of securing funding directly to higher education institutions, and this can apply to both private and public. But because these funds are usually coming through agreements, governmental agreements, or bilateral or multilateral, the beneficiaries to a large extent still remain to be the public higher education institutions. And the issue here is to encourage institutions to compete for project or program-oriented funding from development partners and foundation. Participation in international research, capacity building, grant programs is imperative. We have another aspect in a number of countries in sub-Saharan Africa, which in Tanzania would take an example of Tanzania Education Authority, the TEA, where higher learning institutions can secure funds in forms of loans and grants. And then there is an issue of partnerships between universities and the industry. And yesterday, this was discussed to a large extent, and it was about internships and partnerships between industry and universities, where universities could, where industry could provide funds, especially for research, for scholarships, but as well as for internships. This is one area that has not been fully exploited in African countries, and the same applies to Tanzania. Of course, with the implementation of the HEAT project, the prospect of securing partnerships and agreements between universities and industry are increasing. And then the other prospect is on endowment funds, funds that universities or institutions get from private donors, philanthropic establishments, and charitable organizations. Of course, this culture of donating funds that could go into establishing endowment funds goes with the culture of donating, and is more established in countries like the States. In Tanzania and sub-Saharan Africa, the issue of donations for establishment of endowment funds, I think it's a prospect that remains to be better understood and explored. Of course, there are examples from my experiences way back in 2000, where universities in Africa, selected universities in Africa, received funds from philanthropic institutions in Japan to try and establish endowment funds and get an experience in running such funds. And they demonstrated that endowment funds vested in African universities can be well managed and contribute to realization of respective university missions. In Africa, outside these donors, we can go to the next slide. In Africa, the endowment fund issue is mostly dominated by South African universities, but the other countries in Africa are yet to embark on these initiatives. Now, because the public institutions alone, and also the government alone, may not be able to cater for everything needed for the rising demand in higher education, there is a need to increase the participation of private sector. That includes the private higher education institutions, which in Tanzania they provide enrollment of more than 25% of students in the country. And the figures in the other African countries are more or less the same. Now, countries differ on how much they can depend on public financing, and therefore the pursuit for private financing. And the private financing for higher education can take various forms. We may not be able to discuss them all, but we give some examples. In Nordic countries, the presence of private funding for higher education is as low as 5% or perhaps less. And this is a factor attributed to their policies and their policy issues on how much public funding can be available for higher education, and how much should be left to the private sector. But in the other countries yet, the private sector participation is higher depending on their local policies and the contribution of public finance to higher education. There are people who have argued that it's not always clear whether it is the private sector participation that is increasing, or is it the public sector that is shrinking and make it appear as if the private sector has increased. This is a point that economists can help us analyze further. So in Latin America, we have countries where public participation of the private sector ranges from 40 to 70%, and it takes in different forms. It takes the form of endowment funds, it takes a form of investments in higher education, and it also takes the form of loans to prospective students joining universities. It needs to be said here that attracting the private sector to fund higher education may require some favorable policies that would entice and encourage the private sector actors to invest in higher education. And therefore, the people who have worked on these matters at length observe that the most effective model for indulgence with would be the market model, which allows donors and the private sector some control over their finances. Next. Now, the higher education financing in private higher education institutions it takes a variety of forms. Of course, there is the tuition fees from personal resources and from student loans. This also applies for public higher education institutions, but for private higher education institutions, it's almost their bedrock. Without it, they lose complete orientation. You see that, for example, in Tanzania, the salaries for staff in public higher education institutions, they are paid by public funds. In the private sector, they have to have own resources to be able to pay for that. And the same applies to internally generated revenue that we referred to earlier. And the action required here, they may be to encourage and inspire universities to strengthen their internal generated revenues, as we alluded to earlier. Private financing for higher education may also take in forms of scholarships from employers for their employees, and as well as scholarships, financial aid and grants that we have also alluded to earlier. If we go to the next slide, we'll be looking again at the same things that we have looked at in connection with the public higher education financing. The university industrial partnerships, they take the same form as has applied, has been referred to for public institutions. Now on the endowment fund, as we alluded earlier, the private universities are more dedicated to this prospect than the public funding institutions. As I said, this one is still in development stages in most of the African countries, but we take encouragement knowing that there are universities in the world that have funds in their billions in their endowment funds. And as I alluded to earlier, in Africa, it's only South Africa which can have which leads in this area. In East Africa, we have a branch of the United World Colleges, which is almost run entirely or halfway by endowment funds and halfway by tuition fees. The competition on global grants for research and capacity building that we have already alluded to. Now, because we are in a symposium for Loans Board, we may have to say something on loans in general, not only for Tanzania, but across the globe. The students are concerned that the tuition fees should not increase so that their loan burdens do not increase. But yet the universities need more funds and they want to get them from student fees. It is a dilemma that needs to be resolved. Because the higher the tuition fees, the higher the loan burden for students. If the tuition fees are kept low, this poses some liquidity problems for the higher education institutions. In countries like United States, it's been cited that students finishing university may finish with a loan burden exceeding $30,000 US. And, more than 30,000 US dollars, and that's quite a burden for some of them. There is also a question of administrative costs for most of the loan administrating bodies, whether they are public or private, because there are public agencies that run loans, and colleagues in South Africa may have more to share with their experiences with something like, I think it's called the EduLoan or things like that. And then one thing that was cited time and again yesterday, the default rates. It's a significant issue in a number of countries. It was gratifying to hear from Loans Board that they have forged out strategies that have increased the recovery rate of the loans that have advanced to students. And then the funding issues. The Loans Board and the loans boards across the globe have limited financial resources to expand the loan coverage. There have always been a number of students probably in need of students' loans who have not been able to get. So it seems it's necessary to underscore the consensus that financing for higher education has to keep on increasing, preferably from the growth, preferably as a dividend from the growth in GDP. Thank you very much for your attention. That's all from me. Thank you.
Yeah, you sit there. Thank you, Prof. Our hands together again for Prof. Matovelo for insights from the World Bank on how are they understanding the concern of students as well as higher education institutions into ensuring there's inclusive education, higher education. So now we want to get into the panel discussion. But before we do that, I want to highlight a few things that I was able to pick from his presentation One being, much as there's all indications of increasing trend of population size and demand for education loans. But the paper gives some proposed interventions. Three major things being the need for institutional preparedness. Higher education institutions need to have institutional capacities to be able to absorb the increasing demand in terms of staffing, equipment, and infrastructure. But another question that he's posing in his presentation is a balance between labor market needs vis-a-vis what our higher learning institutions are producing. So how are we prepared to be flexible to accommodate the current and future needs of the labor market into our curricula and our education systems? And another thing that he was able to point out in his presentation is how should higher learning institutions respond in terms of being able to generate internal revenue sources, but also compete in regional and international levels to attract resources, be it in the name of projects or grants, to subsidize some of the operating costs that they are facing in terms of challenges. But in the paper is also forging for opportunities for industry partnership, but also how can we attract philanthropy and charity organizations to provide financing for education. And especially, we all understand some other philanthropy organizations have interest in vulnerable groups, be it women or girls, I would say, and people with special needs and the likes. So how our higher learning institutions, but also financing bodies are able to reach those philanthropy organizations to attract funding as one of the source of financing stream. But he also concluded with critical issues in higher education financing, and one among them being a balance or a dilemma in terms of what is the optimal tuition fee that is reasonable and affordable for institutions to charge vis-a-vis the appetite of our parents or guardians or students themselves to be able to afford, and the loan burden that they are carrying through the financing mechanisms we have in place. So for us to be able to digest more on the same, allow me to call on stage three panelists who shall give their insights on what have been presented, but also share their perspective in terms of how Africa or higher education institutions should address the challenges pointed out. One, may I call Mr. Kenneth Komba in front. Please put your hands for Kenneth Komba. Kenneth Komba is the Director for Financial Deepening and Inclusion from the Bank of Tanzania. So for those who doesn't know, the Bank of Tanzania is the Central Bank of Tanzania. So he is responsible for implementation of financial inclusion initiatives, but he is experienced in the areas of financial systems oversight as well as financial inclusion. The Bank of Tanzania is responsible for regulating the banking and financial institutions in Tanzania, but they are also regulating and spearheading reforms in the fintech space. So we'll get some insights and specifically policy and regulatory insights from Bank of Tanzania. I also have the CEO of the HESB of Uganda, and this is Mr. Wanyama. Mr. Wanyama is a CPA. CPA Wanyama, you're welcome to join the panelists. Can I put our hands together for Wanyama, please? So Wanyama is the CEO of Higher Education Financing Body of Uganda. So he's bringing on the panel the experience from Uganda, but also the East African perspective in terms of our responses to what has been shared by our colleagues from the World Bank. And I also bring on the panel Professor Mohamed Alfan. Professor Mohamed Alfan is the chairman of the board of directors of the Zanzibar Higher Education Financing Body. Can we put our hands together for Professor Alfan? But Professor Alfan is also a CEO of the Zanzibar Presidential Delivery Bureau. So he's in the forefront of planning and for seeing implementation of reforms in the revolutionary government of Zanzibar, and among others being the education subsector. So you're welcome, all my panelists. So what we'll do is I'll pose one question for each of the panelists, and we may have a follow-up question, and thereafter I'll open up for the audience to ask questions. But as we said yesterday, that we are also taking the questions online through the QR codes. You can scan there and put your questions, and kindly be specific, brief, and you can direct your question to a specific panelist, be it Mr. Kenneth Komba, who is coming from the Bank of Tanzania, Mr. Wanyama, who is coming from the Loans Board in Uganda, and Prof. Alfan, who is coming from the Zanzibar Presidential Delivery Bureau. So, Mr. Kennedy, you're welcome. Understanding that you are coming from the central bank and you are in the forefront in implementing policy interventions into addressing access to credit in education. Maybe we get from you what are the policy and regulatory efforts on the ground that are addressing access barriers in terms of access to credit. As you all know that we need credit for various reasons. One being investment to boost our economy, but on the other hand, we need credit for education. So, Mr. Ken Komba, you will share on the same in terms of policy and regulatory interventions that Tanzania is pursuing, but also in a global perspective, what is working in other economies as well. From our colleague from Uganda, and you are here representing our colleagues from East Africa. We have had colleagues from the World Bank giving us the numbers in terms of statistics and how severe the problem is, but calling for interventions for institutions like yours. So maybe you give us a reflection of what does this mean in terms of preparedness and capabilities of our institutions, the loans boards, to be able to do this, citing the case of Uganda in terms of what you have been able to implement, but what else are you looking forward to implement, and what African institutions can emulate given the same. And lastly, from the CEO of the Zanzibar Delivery Bureau, I understand that among others, you're in the forefront of advising the President of the Revolutionary Government of Zanzibar, but also forging the strategic direction of what we can do as a country in terms of addressing the financing of challenges in terms of the education sector. So maybe you can tell us what are the financing needs of the education sector, and in Zanzibar, giving us examples of what does it involve in terms of key stakeholders involved, and what lessons are we learning from the Zanzibar experience so that others in the room and other countries represented can fetch experience from your perspective. But also, what other experience can you share with this audience that you find relevant given the collection of yesterday papers and this global perspective on the same? So may I allow you for about 4 minutes for each to respond on the questions, and if there's any other follow-up question, I'll give the same. So Mr. Kennedy, you are welcome.
Thank you very much, Dr. Murray. And on behalf of the bank and myself, I want to humbly acknowledge this august opportunity that we've been given to share some of the insights as you've asked. Starting with policy and interventions that the Bank of Tanzania, your central bank, is doing. So I'll focus on the policies, and also I'll give you examples of what we as the bank we're also doing in this front of education. So in terms of the policies, we apply like a 4 A's principle. So in terms of addressing these policies relating to access to credit, the first A relates to addressability, the second A relates to affordability, the third availability, and the fourth appropriateness. Starting with the first A, which is addressability. This relates to unbanking or addressing addressability barriers, such things like identification, things like documentation for an individual or an SME to go and get access to a bank. And we work together with multiple players in the country, including NIDA, for instance, to ensure that citizens have identifiable documentation that can also help in the discussions that we had yesterday about loan repayments. So if you're not able to address a person, identify a person, it will be very difficult even to recuperate and recover those loans. So there are several initiatives around that area. Details we can discuss if there are questions. On the issue of another barrier that we see is once you get access to credit, sometimes it may be expensive, it may be not reachable to citizens or to some of the individuals that are borrowing at family level. So affordability is quite important. So we have some specific interventions. I'll give you examples of how this credit can be affordable to the population. In terms of availability, so we look at in two contexts. First, the availability of those resources, providing policies relating to liquidity in the market for financial institutions to be able to own lend. However, we also look at it from an infrastructure perspective, creating efficiencies of systems that will facilitate this credit to be available to citizens. So it may be through policies that we have supported, technological providers to enable the market to have access to quick, fast, reliable, and secure payment systems. And the last, relating to appropriateness, this is how products are tailored, how products are designed to ensure that, specifically in this context, student loans or student products are provided which meet the demands of the market. Now, going directly to some specific examples, which is my part two of responding to this, to save time. So in the bank, we believe also charity begins at home. So the central bank has a scholarship program for students. And this scholarship program is started in 2009. It's called Mwalimu Julius Nyerere Memorial Scholarship. It offers 2 levels of scholarship: undergraduate, meaning bachelor degrees, and also postgraduate scholarship. In the first category of undergraduate scholarship, these aim to provide, again, there are 2 categories in undergraduate. Category A is for female students that have excelled very well in their secondary education and they want to pursue their bachelor's degree. And we specifically target science subjects, mathematics subjects, any other science fields accounting, Bachelor of Commerce, Bachelor of Science, and relate for obvious reason. The obvious reason is that we want them to come and support the industry on science, but also the central bank at some point, if they would come, or the financial sector. So that's for female students. And then this category B is for both male and females. Students who then compete, the ones that have done very well in their secondary education can access this fund. Again, the subjects are the same science subjects. On master's degree, it's available both for female and male students who have done very well in their first degree, which is GPA of 4.0. They can access this fund, this scholarship, and then the subjects are still the same, which are supposed to be science-related subjects, STEM subjects that we pursue. We have a lot of impact. There are a lot of impact stories that have come from since 2009, where students have accessed this fund, these scholarship funds from the central bank. Secondly, what we do is through our regulations, the Banking and Financial Institutions Act, we have a section there under Section 24, which we encourage financial institutions to design products which are appropriate to the market and which are in demand. So I'll give you examples of at least 4 or 5 banks and their products, not to market them, but at least so you know what we do and what is happening on the field. So banks have responded because of this policy and regulations. For example, CRDB Bank provides a boom advance. So this boom advance is like an overdraft that is given to students who already have a university loan, but for some reason maybe it's delayed and they're required to make some payments in advance. They give at least up to 120,000 with a repayment of around 4%, which again is affordable, and it's given immediately. Once the loan comes, it goes through the CRDB Bank, and then it's repaid. So that creates the bridging funding for students. The second was Amana Bank, which offers Elimu financing from primary all the way to PhD, but it has to be Islamic compliant kind of a loan. And they enter into MOUs with respective institutions, academic institutions. The third is Mwalimu Commercial Bank. It provides global educational loan. So this global educational loan that this bank offers, it ranges from domestic university to university abroad, and they just provide up to 50% of the loan that the student is required to pay from that particular university. The fourth is NMB Bank, which offers NMB Elimu loan, targeting salaried workers. So you may be an employee of wherever you are, and you want to pursue further education, the bank can offer this particular product so long as the salary is backed and passed through that bank. So at least maybe I mentioned those 4 for now that are being offered. Okay, the last one of which I can mention, the number 5, is Baroda Bank, which offers education loan, and this also targets any university that a person pursues to uptake, be it local universities or international universities that are offered. So you can see these policies that target the market to have, under the Banking and Financial Institution Act, allows tailored or appropriate services to be offered in the market. The other thing I wish to just mention quickly, and I'll recap there, is we have a national financial inclusion framework, which we sit together to design and discuss inclusive interventions in the market. So when we sit together, we sit with the private sector, we sit with permanent secretaries of different ministries, and including the Ministry of Education for that matter, where we discuss how we can advance inclusive education. And some of the examples that come in those discussions are basically 2 that I think are important, which we could also pursue as ideas. The first is private scholarships. Now, as I said, the central bank is offering scholarship, the Mwalimu Julius Nyerere Memorial Scholarship, but the market is also encouraged to have private scholarship that may target either through the CSRs or through the foundations that some of them exist from philanthropic perspective, but also could be from a CSR, either from a commercial bank or from any of the entities that we have around. Portion of that should also target market interventions and demand on specific skill sets that the country is increasingly demanding, and scholarships could be offered, and I encourage from that context. The other one, and which I'll end here, is designing kind of a social pool of resources. And a classical example is the Harambee system that Kenya has been doing since their independence, when it was first instituted by His Excellency, the late Jomo Kenyatta. So in Kenya, which I believe the colleagues from Kenya will speak about that, Harambee, which means in Swahili pulling together, has been quite effective and instrumental to advance a social funding for education, and which Tanzania also has the potential to do the same. I mean, there are a lot of contributions that people do provide in other social aspects, and education from a societal or village level or community level could be advanced. So I'll probably pause here with my 4 minutes on what we do and what could be done.
Thank you, Kenneth, for the insights from the regulatory perspective and policy intervention. May we also hear from Uganda in terms of their experiences?
Yeah. Thank you so much, moderator, and I'd like to use this opportunity to thank Prof. For the very insightful presentation, where he has been able to give us a lot of statistics on what is happening on the African continent, especially the sub-Saharan Africa. I want to start by saying that in my view, I think there should be no learner who has the intellectual capability, who merits to be admitted in a university, who is brilliant, to be excluded from joining higher education. So what am I saying? I think our efforts should all be put towards ensuring increased access to higher education. I'm glad that Prof gave us a lot of statistics, and you realize he was talking of very low gross enrollment ratio in Africa. He said on average, Africa stands at about 9.3, while the global average should be 38. And actually, just to further take that to another level, when you read the World Bank reports, they claim any country to take off the GR should be between 15 to 20. UNESCO puts it at about 20 to 30. He was also talking about AU, the Continental Education Strategy, that I think also puts it at about 30 to 50 to take off. But you can imagine in Africa, most of the countries are actually below that. I'll just give an example of Uganda. Our GR currently stands at about 9.2. I think in East Africa, Kenya could be the highest, 10.1. I've been listening carefully since yesterday. Many of the presenters in Tanzania have dodged to tell us what is the GR of higher education in Tanzania, but I believe it's between, now the professor is telling us 6 points. So you can see where we are. And we're saying if we are to be in a knowledge-driven economy, if we want to enter into the money economy that we are clever for, we should be on average between 15 to 20. So there's a lot that African countries need to do, especially East Africa. This is a political question, but I must say we're also happy that our governments have come up with targeted intervention to increase access, and that is through the student loan schemes. I'm happy when I heard about the figure that HESLB here is giving, 780 billion. It's not a mean achievement. I think you need to clap for yourself. That's quite a substantial amount of money that has been invested in higher education through student loans. But also when you look at, again, the budgets in terms of the higher education budget. Yesterday, I think Dr. Martin told us, I think out of the education budget in TZ, 21% goes to higher education. But of the GDP, he only said it's 2%, and that's quite small. Of course, the recommended percentage should be about 5 to 6. We are not also doing well in Uganda. But I also want to say, I think there have been a number of interventions that we are all doing. In Uganda, we have ensured that we open up for the education landscape. We have registered now quite a number of higher learning institutions. We talk about 15 government universities and about 36 private. And of course, the loan board is supporting students in all these universities, thereby increasing on access. So I think the debate next time we meet should be now on the issue of quality and then relevancy. I think Prof was also talking about the mismatch of what the programs at the university and what the world of work wants. And I think that can be a debate for another day. But in our country, we have ensured that we increase access by supporting students who join higher education, by targeting critical programs that spur socio-economic programs. So our funding model largely goes to students who are doing STEM. Because we have tried to look at other models that work and others that not have worked, especially if you look at developing countries, how they started and how they reached where they are. Most of the emphasis was on STEM, realizing that this is where they needed to train middle-level technicians who come out with the relevant skills and they can be employers instead of being employees. And I think that is, because I have been discussing with my friends in the Loan Board, that we seem also to be contributing to unemployment in our countries by just training whoever wants to join university, well aware that maybe the program he is undertaking is overstocked. Even getting jobs is a problem. A learner comes out of the university and the first question is asking you, are you going to get for me employment? Moderator, you know our role is not to help these learners get employment, but we can help them to get employment through giving them the relevant training that gives them the relevant skills that can help them to be employers. So I think that's also another area of discussion that we should look at. In Uganda, we fund students, whether in public or private. I know some other countries, I was sharing with my colleague from Zambia. For them, they only fund students in public universities. But I consider that to be a wrong model because it's my choice either to join a private university or to join a public university. What we have also done, some of these universities I'm talking of, you have also seen them extending their frontiers. Even in TZ, private university, I think. I don't know whether Kampala International University is still in TZ. At one time, it had extended its frontiers. I think it's also in Kenya. So in that area, we are trying to address that. We have also ensured that we support needy but brilliant students. I think, Dr. Moderator, yesterday you raised something as to whether we should only be considering merit or we should be considering students who need the best. But even if it's merit, at the end of the day, what considerations are you using? You must be aiming at a brilliant but needy students to access higher education. So in that way, we have supported quite a number of them. One of the challenges that most of these loan boards, Doctor, get, and you talked about it, is high default rates. So I think governments should be very intentional in supporting board through a very strong legal framework that puts sanctions on those learners who get loans, but they don't want to pay, on employers who employ the beneficiaries, but they don't want to provide data on whom they have employed, and at the end of the day, they are failing to remit what they have collected from these learners. What we have done in our country, I don't know whether it's done here, is to ensure that all the beneficiaries are registered on Credit Reference Bureau. You know that the effect is that if you fail, of course your credit rating will be downgraded. If you fail to pay student loan, and next time you want to get monies from any commercial bank, you'll be denied. And that, in a way, is helping us to optimize loan collections. The other thing we have also ensured is that we have an in-house loan protection fund management, that every loan that we issue out, a loanee pays us 1% on the gross loan amount, and that money is meant to indemnify a borrower against death or permanent incapacitation. And of course, this money is put into a sinking fund. And that's what we were talking about yesterday, that these boards should be allowed to grow the fund. There should be targeted intervention within the legal framework, allowing boards to invest in this fund. So for us, when we get this money, we're able to invest it, of course, through a number of discussions, but right now we are putting it in a risk-free investment, and that is helping us a lot in terms of course, we can't run away from death. So anytime a borrower dies, we definitely reach out to the parents, to the guardians, to, allay their fears that maybe we shall, we shall go for their security and that kind of thing. No, we assure them, yes, it's unfortunate that your son, your daughter has passed on, but the board is going to recover this money from the 1% that was paid by this person. So I think these are some of the interventions that we need to work on. But overall, I want to thank the government of TZ. I think through the Student Loan Board, I've seen you are doing a great job in terms of increasing access to higher education. Thank you so much for listening to me.
Thank you very much, Wanyama, for very insightful discussion, reminding us on the need to balance between quality and relevance, but also considering beneficiaries to be part of the credit reference system, but having insurance mechanisms to manage default. So, Prof, you are welcome now to share on how do we ensure inclusive education in Zanzibar, but also who are the non-state actors that are part of the experience in terms of the reforms that you're undertaking.
Okay. Thank you very much, moderator. And let me start by commending the dedication shown by our presidents, Honorable Samia Suluhu Hassan and Dr. Hussein Ali Mwinyi, in improving what is done by our boards. I'm sitting here with 2 caps on my head, as it has been earlier announced. The chairperson of Zanzibar Higher Education Students Loan Board, and at the same time, Chief Executive Officer of Zanzibar Presidential Delivery Bureau. My talk will dwell more on the first part of the chairmanship. However, as education is one of the key strategic areas under my supervision, as well as resource mobilization for it, I cannot run away from my responsibility as the PDB CEO. I'd also like to take this opportunity to thank the Higher Education Students Loan Board of the United Republic of Tanzania for all the support it has been providing to Zanzibar Higher Education Students Loan Board. Surely, alone we wouldn't have done what we have been able to do. So thank you very much, Dr. Bill Kiwia and other colleagues at the Higher Education Students Loan Board.
We can clap for the Loans Board for their appreciation.
Yeah. Now, about the issue of collaboration. It's very important to know that much as education and other social services like health are the core responsibility of any government, but a government alone cannot do everything. And it's also important to recognize the important role non-state actors, NGOs, other faith-based organizations, and so on and so forth, can complement what our boards are doing. Previously, whenever the result season is knocking our doors, most of us will be spending sleepless nights thinking, what are we going to do with the new batch of students who will be needing funding for their studies. That is, as much as I know, has decreased or has been made by the contribution our government has been doing recently. But still there's a room for others to come in. And I would like to cite an example of one NGO in Zanzibar the moderator has directed me to do, in showing how if we engage non-governmental organizations, they can also play an important role in supporting what we do. This organization, which has been established by Zanzibar professionals, in their constitution, they are duty-bound to contribute about 5% of their monthly income to their NGO, specifically to support needy students who are talented, who have all the credentials, but just because they are coming from poor families, they couldn't afford to pursue their higher studies. And while the government was concentrating mostly on tertiary, master's, and PhD levels in financing, this NGO decided to concentrate at the pre-university level, certificate level, diploma level, and by then, the government was not financing diploma level students. So, by recognizing its contribution, and here I'm underlining the word recognition. When we recognize these non-state actors and appreciate what they do, they can support a lot. This organization has been able to support right now more than 1,000 students, some of whom have graduated, have received their doctorates, some still continuing. And there was a time when the government got scholarship to one country, and it was supposed to pay for just tickets for the students. It was a budget session, so the money was not in the coffers yet. The same NGO offered the tickets, which were of course later on paid back by the government, to the students, about 40 of them, and went for their further studies. A lot can be learned, but through this collaboration, we have realized that there are other international organizations who wouldn't like to pay the government the funds for financing their education, but who are ready to collaborate with non-state actors who are involved in those activities for reasons known to them, who are ready to support that. So this organization also received about 70 PhD offers to send students to Malaysia, Indonesia, Turkey, especially those who are in the universities. Also, one of the lessons learned from how this organization is run is the beneficiaries do not, actually the beneficiaries are required to pay back immediately upon receiving the funds, of course gradually and in small lots of payment, contrary to what we do in the Students' Loan Board, whereby it's only when a person gets employment, especially the Zanzibar Loans Board, it's only when a person gets employment that when he or she would start paying back to the government, which keeps a lot of funds in the hands of the beneficiaries because of the issue of getting the employment opportunity. But this organization, a parent or a guardian can approach it. It will pay directly to the university fees. Then the guardian or the parent will be required monthly, interest-free, to pay back the loan given in that particular semester or that particular year. Of course, not all parents or guardians can afford that. and a case by case is regarded in that situation. However, this has enabled the organization to see the fund revolved in a very short period in a speedy manner, contrary to what we do in the Students' Loan Board and the government. Of course, for obvious reasons, the government has more money than the NGO. So let me stop there. And I believe that if we organize ourselves, the little we do can have a great impact on those we support. For instance, organization which is dealing with contractors, they can contribute a certain percentage of what they get to support those who are learning, for instance, at other university. Banks can support those who are dealing with financial education and so on and so forth, as has been cited by our colleagues from the central bank. Health professionals can say that we are contributing a certain percentage of our income to the health fund to support those students who are studying in medical fields. Whenever they face a challenge in that area, at least they can borrow from it interest-free or be given a grant depending on the need, and so on and so forth. So, moderator, I would like to say that we shouldn't undermine the potential and the capacity all of us have. And we shouldn't leave the burden to the government alone. All of us can contribute, and our contribution can make a very big impact, surely. Thank you very much.
Thank you, Prof, for bringing in the practical experiences of non-government actors in terms of what they can contribute in the financing challenge. So I have 3 questions from the portal. But before I put them forward to our panelists, can I see by a show of hands in case you have a question so that we can also take that. We are not doing very good in terms of time, so I see a hand there. Can I have a microphone there? Yes, and another microphone to a lady there, yes.
Thank you very much, presenter, moderator, and all the panelists. We have been discussing very important issues that concern higher education financing. And from all the discussions that we have here since yesterday, have shown the need for increasing the funding for higher learning education because the demand is inevitably increasing. And from the current discussion that you have here, we have appreciated the fact that if we need to have a sustainable higher education financing, this has to be everybody's business. It's not a role of government or, only a certain organization to financing this. And the issue of having a contribution or participation of other stakeholders, the government, yes, it's at the center, we agree that, but the non-state actors, the community and all others, is becoming imperative. But here is a $1 million question. Can we have a fit-for-all mechanism or modality that will allow these actors, individuals, private sector institutions, NGOs and others to participate in higher education financing? I think that is important because the issue of all participating in higher education financing is not a question, it's an obvious fact. but a modality, a fit for all, an inclusive mechanism that will allow the participation of these actors in financing higher education. I think that is an important question that we need to discuss and probably ponder. And another question would be, who will be responsible for that? Yes, we have heard from the BOT. They have, in the policy frameworks, they have some requirements with regard to banking and financial institutions, and probably NGOs and all that. They may be having their own their own ways, but these are on the silos. If we have to have an impactful contribution of other actors in the higher education financing, we have to have a certain modality that will, a platform that will be allowing the effective participation. Thank you very much. I'm Indiaeli Daniel Kaya, a Deputy Director from Eastern Africa Statistical Training Center. Thank you very much.
Thank you, Dr. Kaya. We have a question from a lady there, and then Professor Msofe there on the second row. Yes. Prof, wait after the lady. Yes.
Thank you very much. My name is Janet Suleiman. I'm the Deputy Principal, Academic Research and Consultancy from the Al Maktoum College of Engineering and Technology. I have a concern with the 25% of youth depicted in the presentation from Professor Jairus earlier on. We are informed that the 25% of the youth, they are unemployed, they are neither in the education nor training. So where are these youth? Taking into consideration the situation we have right now in our secondary schools, like earlier this, towards the end of January, we received the results from the CSEE. We observed that some of our schools have, it goes about 70% of the students, they have 0 in Form 4. Where do these students go into? Don't these students need support? Coming from a technical institution myself, we have a vocation level group of students that we take in. And these students, you find that most of them, they performed poorly in the CSEE. And when you take them into this program, eventually when they finish their diploma programs, they come up with very good grades. We have some students who even end up getting the first class GPA in their technical education. So maybe we could also consider pulling these students that they seem to have failed their CSEE, but we can somehow support them through our financial aids, and then so that they can further their studies. Instead of them being right there in the streets, they're unemployed, they're neither in the education nor training. We are creating a certain pool that will be a problem in our societies. Thank you.
Thank you. So that is a comment and a question in a way, asking the financing strategies for technical level, the treasury level. But another question, I think, goes to the presenter about the 25% of youth who are not in school, they are not in training. Where are they? They are not employed, they are not in training, they are not in schools. So maybe the presenter will respond to that. So, Professor Msofe?
Thank you very much. Thank you, Professor Matovelo, for a very broad presentation that actually gave a very broad perspective on financing. Now, my few interactions with the students who acquire loans through HELPS kind of give me an impression that majority think that's a grant, it's not a loan, that they are not obliged to refund because, like, it's government money, it's my money, I take it, and, you know, the government will bring another money. So I'm seeing here an issue regarding our perspective toward education financing. So I know Kennedy and his group are doing a great job on financial inclusion. And I think probably we need also to bring that level of understanding that a loan is a loan. And only those who really need that loan should apply for that loan. And the loan must be repaid so that others can also be able to benefit from that. Because now, for example, when we contribute for weddings and all other social activities, we know that we contribute because there's a cost element into actually accomplishing those activities. But do we also have that understanding that there is actually a cost implication into higher education? So probably in your sessions on financial inclusion, maybe that element on knowing that if you borrow money, you need to return. You borrow only when you really need, and things of that nature. Maybe it will help a little bit on, because I'm sure there are students who are getting loans who do not deserve, and the others who do not get and they deserve. I'm sure of that. And why those they get? Because the process allows them to get, but probably they don't need it. If they understand that they don't need it, probably they won't even apply. Thank you.
So, given that we're not doing good in terms of time, may I allow my panelists to address the posed questions? So, Mr. Kenneth from the Central Bank will address two. One, a question from Dr. Kaaya in terms of the modality. Is there a modality that would allow every willing participant to contribute into higher education financing, be it an individual, an institution, or wherever, or a sector, or prayer, or otherwise? Is there a modality? And if yes, who and how? And the second question from Professor Msofe was about financial redress in terms of the responsibility of those who are borrowing, to understand that it's a loan and what does it mean, and even the parents and whoever. To the presenter, it's about the 25% of the youth who are not in schools, they are not in employment. Where are they and what are they doing? And are there mechanisms to tap those into vocational skills and channel financing for the same? To you, Wanyama, there's a question about why we are always prioritizing science subjects. Why is it so? And another question to you, Mr. Wanyama. There's a question that most of these higher education financing boards are under the Ministry of Education. Why is it not the Central Bank or the Ministry of Finance for them to be more effective? And the last question goes to you, Prof. What is the question which was presented to the portal was about one of the participants is wondering, why are we talking about higher education financing and we're not talking about technical and vocational education financing? So maybe you can amplify on the same in terms of policy direction and interventions in place. So you're welcome. From the presenter, Prof, to respond on the 25%, and then the rest will follow.
Yeah, thank you, Mr. Moderator, and thank you for the questions. Again, in the interest of time, I can see you are taking a look at your watch. I'll try to be brief. For the 25% or something like that that are not in school, they are not in college, they are not employed, where are they? It it may sound not being very serious, but they are either at home or on the street. Now, how do we go about it? We have to engage at government and as the Prof referred to, and with the cooperation of non-state actors. Redeem, rehabilitate, and retool these people. These initiatives can come from an angle. But with your permission, I see the Minister of Education, Director for Higher Education, and the Director for HEAT projects. They could add by sharing how the revision in curricula at primary, secondary, has been revised to try and see that there is nobody that will drop out of school without skills or capacity to be able to be engaged in any productive activity, if your time will allow.
So very brief, Dr. Osea, maybe you can share in terms of the interventions for, policy intervention for the dropouts.
Yeah, Mr. Chair and the audience, this is abrupt. I had not really prepared, but I'm going to speak very generally. The cohort of students that are already graduated from primary school and secondary school who are already in the street, there's very little that we can do. We're just going to rely on NGOs and other measures and interventions that are already taking place at small scales. But for those who are at school, as Professor Matubelo already said, we have a brand new curriculum education policy. We have brand new training opportunities that start at age 6. From age 6 into our new curriculum, they start with what we now call Elimu Msingi, and for a period of 10 years, they're going to remain at school, and at the age of 13, they are given an opportunity to learn a trade. We call that Amali. So this problem of people staying at home, that big number of people staying at home, we will not have it once we have gone through our new curriculum, because from the age of 13, that is Form 1, our children now will get an opportunity to learn a trade or a sport or whatever they really like. We call those Amali. There are now opportunities from the age of 13 up to when they are 16, when they leave the basic education. So that problem is going to be toned down, is going to be reduced by large. But for those who are already graduated from high school, already graduated, with no skill, no trade, the interventions, what can happen to them, we just hope they will grow up and find something to do. But for those new ones that are coming out now, the ministry and the government have got really very good plans to make sure that when they reach the age of 13, they start learning a trade or a sport. And once they come to teenage, young adults, 18, we will not have people who have no skill or whatever to do. So, Mr. Chairman, that was an ambush question.
Thank you for your
I have here with me my Director for Policy and Planning. Some things that I did not, maybe he was here.
No, we don't have much time. Thank you. That
Yeah.
one is
Thank you very
enough.
much, Mr.
We appreciate for your readiness to share. Oh, Kenneth, you can now proceed.
Thank you.
Thank you so much, Dr. Mari, and also I want to acknowledge the great presentation by Professor Jairus. On the two questions that I've asked, the first, whether we have a one-size-fits-all mechanism, the answer, we don't have one-size-fits-all or a universal approach to fund a private financing for higher education. However, it's a multifaceted approach where it starts from the central government, so looking at the ratios that we had from the presentation, to what extent, to what level our GDP should also contribute to education, and we know that our good government is doing great initiatives and efforts to address that. Then coming towards the corporate sector, we from regulatory institutions, we also encourage the market either through the national financial inclusion strategies that question 2 that was asked, but we also do encourage from that sector. We provide policies, as I alluded before, which relate into enabling the market to have appropriate financial services. But the third point is ESG, environmental, social, and governance initiatives that different organizations are applying. And that social element relates also to providing skill-based, enhancing the societal capacity to be able to advance and address issues that we face. The second question that I was asked relates to whether we are changing the behavior of students to understand the loan is a loan and not a grant. Certainly we do, and we have 2 interventions. Again, thanks also to Professor Msofe and also Professor Jairus, who participated and collaborated with us 2 years ago, where we have on-schooling and off-schooling programs in Tanzania for financial literacy. The off-schooling program targets those 25% of students and people who are not in schooling system, where we have 5 modules of financial literacy. And this off-schooling has a certified financial educator programs. It's a TOT, which intends to teach the public about several personal financial management. One of the modules that goes directly to Professor's question is financial obligation. And in part of that financial obligation, citizens or people are required to know that they have to use their financing to pay back either rent, taxes, and loans. And then for on-schooling programs, we have, again, also through the HEET program, we did develop a guide for universities to adopt financial literacy as one of, not an elect, but a compulsory subject. It's up to the university to know how they will inculcate financial literacy. Again, there's a module of financial obligation, which relates to the responsibility of a student to pay back whatever loan that they've taken, including, by the way, the loans that students do take from mobile phones. So we're supposed to be repaying that. So thank you so much, Professor, for that question.
Thank you, Kenneth, for that response. Welcome, Mr. Wanyama.
Thank you so much. I think my question related to why we are prioritizing sciences. I just want to say there are many models of running the student loan scheme. And for us as a country, Uganda, I think we have had what we call a paradigm shift in terms of addressing where we had shortages of manpower. Especially, we discovered it was in the area of sciences. I'll just give you an example. I think even someone mentioned here yesterday, could be the moderator, where you find one doctor treating 20,000 people. So we had a shortage in that area. We had a shortage in science teachers. You would find a science teacher of chemistry applying between 45 schools. So as a government, they took a policy direction that I think in the first 10 years up to 2040, let's put focus of training scientists. But like I said, it depends on your need, particular needs in that country. And then, of course, we also wanted to address the needs of the labor market so that the people we are able to train come out with the necessary competences and skills to fit in the world of work. I'll tell you, our Excellency has the campaign. Many universities have developed a program called Bachelor of Development Studies, and he has kept on questioning at the end of the day, what are they training for? Because we realize some of them, when they come out of universities, and you ask them which jobs they are looking for, the answer is any job. Surely if you tell me you can do any job, then it means you don't know what you're trained for. In terms of why we are domiciled, many of these loan boards are domiciled in the Ministry of Education. It's also a policy matter, but you also realize that largely their objective is to increase access to education. So most of the governments find it befitting that they're domiciled in education. But I know a few countries, one of my colleagues here from Eswatini was telling me that their scheme is domiciled in labor and gender. So I think it's a question of government deciding, but the overall overarching objective of loan schemes, you'll always find something to do with increasing access to education. I know for you are looking at the fund management, but whether within education, it's a question of employing people who can manage the fund. I personally am a CPA, and the majority of the people managing the scheme come from the accounting, economics, background, statistics. So it's a question of a policy matter for government to decide where it should be domiciled. Thank you.
Thank you, Anyama. And lastly, Prof, if you can give insights in terms of the technical education financing.
Okay, thank you. Thank you very much, moderator. Here, first of all, I would like to thank our sister, Binti Suleiman. I didn't hear her first name. Normally, we tend to undermine others simply because we are in the top hierarchy, whether it is politically, educationally, financially, and so on and so forth. Forgetting that without those who do not reach where we are, or who have not reached where we are the most important people in our lives. And here I'm referring to technical education, vocational education. All of us, I don't have exact figures, but I believe most of us here have got these gadgets. And whenever something happens to these gadgets, which have become very important in our lives, we don't go to a university graduate student to mend them. We'll be going to a shop whereby the person who will deal with these, the secrets which are here, the wealth which is hidden here, will be handled by a person who hasn't gone even to O levels. I'm sure all of us witnessed that. This emphasizes the role of identifying talents of our children, of our people, and develop them. And that is one of the areas where most of us have failed. We feel that as long as I have got a degree, then my life is superb. While in reality, that is partly right, but at the same time, we shouldn't forget that there are others who have not even gone to school, but are very important in our lives. So I'm saying that as a request, if it will please the organizers, to have a resolution specifically on how we are going to support the government in ensuring that there is a proper process of identifying talents of those who couldn't even pass their O levels, but they have God-given talents which we have an obligation to identify and develop them. Thank you very much, moderator.
Thank you all the panelists for sharing your experiences and the insights into addressing the challenges posed by presentation from our colleagues from the World Bank. So we have come to the end of this morning's session, and can we put our hands together for my panelists, and I allow you to get back to your seats as I welcome Dr. Makundi to proceed with the rest of the sessions for the day. Dr. Makundi, we need an icebreaker because we need at least to stretch a bit before we get into another. Yeah, I've been asked to have a group photo with the panelists, so I believe you would allow me.
Yes, it's a good idea to have a group photo for the panelists and the moderator, so we'll adopt that in the future. presentations. Thank you very much. Thank you.
Sorry for the time.
Okay, maybe we can stand up a little bit and stretch for 1 minute before we go to the next presentation as advised. I think it's good for our health. Yeah. Asante sana. Thank you very much. So, as our program indicates, ladies and gentlemen, we will spend some time here in Selous Hall, and then we close this two-day symposium, and we have our lunch, and then we proceed with other activities. So, going forward from now, I will have 3 presentations, which I will break into 2 presentations, a panel, and another presentation and a panel, and we'll go to the closing, very brief closing ceremony, and we'll finish our session here so that we can go for lunch. So we will start with a presentation from Brazil, and then we will continue with the presentation afterwards immediately for the presentation from Malaysia, and then we will have a panel. After that panel, we will then go to the last presentation, which will also be followed by a panel. I would like to advise the presenters to use the pointer so that the technical people don't have to struggle to keep up with your pace of moving across slides. I think it is working smoothly. You can still go to the online system for comments and questions. You can also access the materials, including presentation slides, so that will happen. I convey the appreciation from the Higher Education Students Loans Board to the sponsors of this event, as indicated in the signboard also mentioned. I don't have the time to mention you now, but we really appreciate your generosity to support the event. So now, without wasting time, let me now invite Professor Paulo Nascimento from IPEA, Brazil, who is going to make the presentation titled Envisioning the Future of Student Financing, Practical Experiences from Brazil. So as you could see, we started with a global perspective. Now we are going to have specific experiences of country cases, and Brazil will be the first of the cases, and then we'll go to the next one. So let's clap for Professor Nascimento. You're welcome.
Good morning. First of all, I'm very glad to be here, and it's a very nice event. I thank the Higher Education Student Loan Board for the invitation. We are planning some work together, as yesterday we had a memorandum of understanding here, and I hope I can bring some of the Brazil experience to inform the debate that can be useful for Tanzania and elsewhere. And I have been modifying my presentation a couple of times since I arrived here, because I think I should bring something that might be useful with the debate that other people have brought about. And I also try to make it quicker presentation. So that's the challenge, to have an efficient presentation in a short time, because I don't. I want my colleagues from Malaysia and Korea to have time to address the presentation as well. So basically, before I start, I think, although I haven't prepared properly for these specific questions, but I think my presentation can help to reflect about a couple of questions. First of all, how to fund a growing higher education system, and I can tell that I don't have the answer, but I can bring part of the Brazilian experience. Of course, the challenge in Brazil, in Tanzania, and in most countries, and it's a challenge that's more important for developing countries, is to bring private resources in, because of course the government alone is not enough to do that. And then we can discuss a little bit about the student loans. Yeah, of course, there is a role for student loans in such a context. And given the importance of student loans, specifically student loans and financial aid in general, we can discuss how to make it more accessible for students and sustainable for governments, but also we can discuss how to build some kind of market structure to attract private funds to finance students in higher education, but also vocational students. Well, first I try to enumerate factors that can either fuel or constrain the demand for higher education in the coming years. Look to the future. We can talk about economic factors, demographic factors, educational factors, policy factors, and social factors. And I have been trying to organize that for, well, where should I point this? Okay. For Tanzania and Brazil. And I will present a table here trying to address these factors as factors that can be accelerating the demand, containing the demand, stabilize the demand, factors that bring uncertain impact for the future on the demand for higher education. I apologize if I'm too optimistic, but I think that in the case of Tanzania, these 5 factors are actually accelerating the demand for higher education, while in Brazil we are in another moment. Basically, in Brazil we have some uncertainties about future economic scenario, whether Brazil will grow, will not grow in the coming years. These affects the demand for higher education. Different from Tanzania, that are starting to experience, fully experiencing the demographic dividend, when you have more working age people than dependent population. In Brazil, we are almost at the end of our dividend, demographic dividend. So we are actually starting to experience the challenges of a rapid aging and low fertility rate country. So nowadays, the fertility rate in Brazil is like 1.6 child per woman. So we are still a young population, but we are aging very quickly. So our demographic dividend is pretty much at the very end. Well, in case of the educational factor, we have in Brazil a slow but steady improvement in secondary school graduation, and I have been hearing about Tanzania that there is a movement of accelerating the attendance in basic education and the finishing of the basic education. So there will be more demand for higher education. And the government here in Tanzania seems to be working to expand access to tertiary education. In Brazil, we have done that, of course, and more recently, one factor that might accelerate demand for higher education in Brazil is that the focus is on for the government is now on secondary education to increase the numbers of students completing secondary education. So this year, actually last year already, the government started to provide financial incentives for students in secondary education so they can finish. But at the same time, the same government decided to make regulation for distance education stronger. So I will show later that distance education was one of the engines to accelerate, expand enrollments in higher education in Brazil in recent years. And in Brazil, people are more and more skeptical about the degree values compared to employability and so on. So that's a challenge. And so before I present something about the Brazilian experience, it's important, I think, to present something about Brazil itself. Maybe it's not a very familiar country for many of the people here. It's far away from here. No, it's not working any longer. Not working. I think we have a technical issue here. It's not working. Nope. Sorry. Can anyone help change the slides, please? Oh, now we did. So Brazil is the largest democracy in Latin America. Probably its past policies and political decisions regarding higher education might be informative somehow. Now it's working again, thank you. We are 203 million Brazilians. That's quite a large country. Yeah, we are the biggest country in South America and the fifth, I think, in the world. We have about 12 million people enrolled in higher education, undergrad students plus postgrad students. More or less 10 million of them are undergrad students, okay? Our gross enrollment rate is just above 40%. Net enrollment rate, 26%. Okay, so the number of youngsters between the age of 18 and 24 over the enrollments of all these people over the population of 18 to 24, 26%. We have our national plans, which guide policies in all levels of government in Brazil. It's a decennial plan. We are finishing now the second decennial plan for education, and we have pretty much the same target that was not achieved for higher education, which would be one in each every 3 youngsters from 18 to 24 years old would be in higher education or already finished higher education. We are not there yet. Please don't change the slides anymore. No, please. Yeah, that's it. Now it's working again, so I will make it from here. Thank you. And the Brazilian higher education system is one of the most privatized of the world. I wish I had more figures here in this map, but I took that a few years ago from UNESCO website, and the ones in gray didn't have the information in the UNESCO Statistic Institute when I took this data a few years ago. Probably now it would be updated. But Brazil is one of the most privatized. We have actually nearly 8% of the enrollments in undergrad programs are in private higher institutions, higher education institutions, okay? The public sector cover just over 20% of the enrollments. That was a political decision made in the past. It was not explicit. It was not like the government said, we will rely on private higher education institutions to grow the system, to expand the system. But that was there since actually late 60s when we promoted reforms in the higher education system that made it more friendly for private institutions. So, it also, our government also provides public subsidies, and from time to time, some waves of the regulation that benefit private higher education institutions. So this graph here shows the number of enrollments in higher education in Brazil over the population. So enrollments by 1,000 inhabitants in Brazil from 1954 to 2023, okay? So as you can see, we have expanded quite a lot in the last 70 years or so. But there are two greater growth moments which I would locate at the end of the 60s until 1980, and the other one from 1995 to 2015, okay? The common thing there is these periods were periods of high economic growth in Brazil. Besides that, these were periods following changes in institutional arrangements for higher education system, especially changing the regulation, so the private sector could be more interested in higher education in Brazil. So as I said, the first boom moment was the late 60s to 1980. That was also the period that Brazil, the per capita income in Brazil grew more rapidly. It was the big economic boom in Brazil, nearly 6% per year of economic growth. But also, as I mentioned before, we had the huge university reforms in 1968. So the 70s were a moment that the private sector really started to be important in Brazil, okay? So the growth was mainly because of the enrollments in private sector. And the other period in 1995 followed a new deregulation moment in Brazil. And also, so we had some changes in regulation from 1995 to 2002. And then in the early 2000s, we start to experience a new economic boom, plus have public subsidies. We have student loans in Brazil since 1976. But from 1976 to the early 90s, we had a federal scheme from the government run a service federal scheme for student loans, and then discontinued in mid 90s, and start a new one in late 90s with more subsidies, especially during years 2000s. And it's important also to mention that these student loans are basically for students enrolled in private institutions, because our public institutions, they are free of user charges. That's another political decision that was made. So basically, since the university reforms in the late 60s, Brazil has chose to have a small public sector that is perceived as better quality for research and so on, but very restricted, and a growing private sector that actually provides most of the places for higher education students. A little bit of the finance in Brazil, the higher education finance in Brazil. As I said, public higher education institutions are free of user charges. Needy students receive some financial aid to study in the public sector as well. Private higher education institutions are subsidized by tax waivers. Actually, the government provides tax waivers in exchange of free places in these institutions. So in these free places are mostly, the selection of the students are mostly done by the federal government, okay, for these places. We have also subsidized federal loans available for needy students, okay. Most of these loans are operated by the federal government. More recently, we start to have a private market for student loans, but of course it's quite restricted still. And the middle class families also are subsidized with tax returns. So family expenditures with education can be partly recovered in the form of tax returns. Middle class pay tax returns in Brazil, not the very rich, not the very poor. So they are the subsidized ones. And this graph here shows the last 15 years or so of the numbers of contracts from the federal scheme, student loan scheme. We had more or less 76,000 contracts per year until 2010, and that was more or less like that in the years before that. And then we start, the government starts to offer more loans and expand eligibility for those loans. Historically, it had been for needy students. In the discourse, it was still for needy students, but the government decided to make it eligible, students from different backgrounds being eligible, and offered more contracts. So that started a growth moment of student loans, federal student loans in Brazil, until 2014, when we had 732,000 new contracts for new students that year. And the year after, Brazil started to face more severe fiscal restrictions, so the number of contracts fell sharply, and keep doing that for the coming years. And by the end of 2017, the government decided to modify the way the federal student loan scheme was designed and introduced the income condition repayments for the new contracts that would start in 2018. The problem is the collection mechanism was not really designed, so the government is still struggling to collect income condition repayment from the federal student loans, okay? And I have been studying this topic for the last 10 years or so. And the government in Brazil is about to finally introduce income condition repayments using the payroll to collect the repayments. And there is a system run by the government that employers must put there, collect many things from the payroll, and they are trying to introduce also repayments from the student loan system there. But my point is, in Brazil, although we have informal sector, of course, tertiary degree holders are not as informal as non-tertiary degree holders. If we use the payroll deductions, we will reach many people. But if we use the besides the payroll deductions, we use other instruments that our internal revenue system operates, not only to assess incomes but to collect repayments. Then we would reach most of tertiary degree holders. In some age brackets, something like 90% of them. That's what this graph shows. So the discussion is, okay, income contingent loans are a good way to make the student loans in Brazil more accessible, but also for the governments that provides the funds, it would make more sustainable if the collection operation is efficient, okay? But beyond the Brazilian past experience and even the current experience trying to introduce the income contingent repayments, we can discuss income contingent financing as a strategy as well to attract private investments into higher education system. This is a debate that we have been doing a little bit in Brazil, but not as much because there is some resistance to use mechanisms to access, government mechanisms to access and collect income contingent repayments and make these available also for private funders. So here, I use here one of the slides from the first presentation, I think. And these are a number of potential possibilities for private resources in finance, higher education. I just include here an eighth one, which should be income contingent financing as a strategy to attract that. Okay, how? And of course, it could be somehow substitute for scholarships. It could be also a way to provide other financial aid. And first of all, let me talk a little bit about income contingent financing. Although Tanzania operates income contingent loan system, it's good to discuss a little bit the intuition of that. It is a financing instrument, but it's also a kind of insurance for the students because the idea is repayments are made when the student has income to pay that. So when the student does have enough income, during that period the student doesn't pay, and it's not that he or she is on default. The idea is to design a student loan that the repayments are managed in such a way that students repay as his or her income trends allow. And it can take, of course, much longer than the 10, 12, 15 years of usual student loan repayment periods, okay? But for some students will pay it quickly, some students will pay in 10, 12 years, some students will pay in 20, some students will never pay back the entire loan. But that's a way to build a student loan system with some insurance features for the students. It can be a debt instrument, but it can also be venture capital. So you can design income contingent loans as a loan properly, or you can design those as income share agreements, which are some kind of equity-like instruments. So the idea is the same. Students repay as they have income, but you don't have a debt attached to the student records. You actually have a time window when income contingent repayments should be collected and transferred to the investor of the student, okay? What is it suitable for? It could make government student loan schemes more, from the side of the government, more efficient, more sustainable, at least if the collection mechanism is efficient enough, the government would recover repayments from those who are able to make payments. But it can also be suitable for private investors, as long as there is a collection mechanism in operation that can be accessed by private investors. In this slide, I only mention countries where there is some kind of income contingent loan system in operation. In all cases, these are government-operated systems, of course. But in the other side, I mentioned some companies that I know that exist in different countries that they provide income share agreements for students. So that's the equity-like instrument that I mentioned before. Of course, these companies, they don't have enforcement to really know the income of the students they finance, but they try to make some kind of arrangement so the student can inform the income and repayments be collected. But private companies operating this kind of finance instruments, they are very niche, so they finance a very specific group of students, because of course it's quite expensive and risky to follow the income trend of these students for years. And the governments that they operate income contingent loans, properly loans, and the most efficient schemes are the ones that involve the respective internal revenue systems in the collection, assessing the income and collecting the repayments. Okay. And this figure show the policy proposal that I have been making for the Brazilian government in the last 3 years or so. Of course, it would work differently in different countries, but the idea for Brazil is to build a mechanism that students enrolled in eligible degree or certificate or diploma programs, either in vocational education or in higher education, they could go to financial institutions either and also look for government schemes. So, but they can go to financial institutions and get income contingent loans or income share agreements. The financial institutions that make this contract with the students, they have to inform a regulatory body. And this regulatory body will pass the information to the internal revenue system on which people are actually financed in this way. So the student uses the money to pay tuition fees, to cover personal expenses, to invest in career projects, whatever. And later on, after they conclude their studies, the internal revenue system, knowing that they took that kind of financing, they will collect repayments as if it was a tax. This idea is inspired in the Australian and English system. They don't have a tax, they don't tax the students, but they use the internal revenue system to collect student loan repayments as if it was a tax. And the internal revenue system collects the money, and the regulatory and governing body distributes the money to the financial institutions, whether they are public or private. It could also serve as a compensation for investment of the states in the studies of people who studied in public institutions, for example. Instead of paying fees, they would do in this way. That's an idea, okay? It is not easy to advocate that in Brazil because, of course, you need to build an infrastructure that most of it actually exists, okay, the infrastructure to build that. But you need to change the legislation so the internal revenue system can do that, and all that operation is regulated, of course. And it takes some time to make these things happen. But the question that I leave here is, could such a mechanism exist one day in Brazil and elsewhere? I know there are lots of political sensitiveness on that and difficulties as well. But that's an idea, because my view is such a mechanism could bring in private funds as well, for at least for student loans and income share agreements, and make the government schemes more efficient. Okay, you would at the end subsidize only those who actually cannot pay back in their lives. That's it. Thank you very much. Oh, it's not working again. Oh, it is. Thank you, and that was my presentation.
Thank you very much, Professor Nascimento. We clap for him again. So I will invite you back to the podium after the next presentation. So as we discussed about our program, so we have our next paper, and then we will have a panel for which also the presenters will be part of the panel. We will have some questions for the panelists, and that will be followed by open discussion, which will also involve the presenters. So the next paper to be presented, I will request the presenter to observe the time, maximum of 30 minutes. If you can do less, that would be even appreciated, but we want to learn from your experience. And the paper is titled Operationalization of the National Education Savings Scheme, Achievements, Lessons, and Way Forward. And this is going to be presented by Mr. Ahmad Dasuki Abdul Majid, who is the Chief Executive of PTPTN from Malaysia. Let's clap for him. You're welcome.
Okay, asante. Asante to Mr. MC. Habari to everyone. Yeah, good morning. I think it's still good morning before 12. I hope I can get your attention to share what we have from Malaysia. So, with respect to a time, let me introduce. So I like this is, little by little, a little become a lot. So this is a proverb by the African countries. So this is where we are going. This is where I'm going to share the Malaysia experience about savings habits. As per our discussion a few days ago, yesterday and today, I've seen a lot of similarity between higher education student loan board here in Africa and with PTPTN. And PTPTN is a short form for National Higher Education Fund Corporation, similar like student loan board, but we are the biggest one in Malaysia. And to set the background of this presentation, so for PTPTN, we are the largest agency in Malaysia. We are disbursing roughly about 180,000 students yearly basis. And on yearly basis also, we are continuing giving students for the existing students for 450,000 students. And so far, we have disbursed roughly about 74 billion, roughly about 15 billion US dollars to all Malaysians to further their study in higher education. So this is where my presentation today comes from. I'm going to talk about the sustainability of higher education financing. So all we'll be talking for the past yesterday and today is about the financing, but my perspective today is about presentation for how are we going to move forward, because we are already done. This is our 28 years of operation of PTPTN. And 28 years is a long way to go. And for your information, okay, this is something about PTPTN. So we were established under our Act 566. This is the catchy one, because our noble mandate by the government is to ensure no Malaysian is left behind in pursuing higher education due to financial reasons. So we are there to help Malaysians who have ever been offered a place in the university. So for your information, on yearly basis, roughly about 300,000 Malaysians being offered a place to study, to further higher education in private university. and 50 to 60% is being financed by PTPTN. And if I compare to the loan board of African countries, most of the function is to provide for loan disbursement and for the loan repayment. But for PTPTN, we have additional mandate, which is for education savings, and whereby we were mandated by our government to proceed with collection, higher education funding. Before I go that, okay, never mind, I can, never mind, it's okay. So our vision is to become a leader in the National Higher Education Fund. So we have a few small agencies, but we are trying to lead all the other agencies to cooperate with PTPTN, and because we are among the largest one in Malaysia, and also I think we are also among the largest in the world in terms of financing the students for higher education. Okay, this is how PTPTN works. It might be different from the student loan boards here. Okay, when we first started way back in 1997, we received a grant for 5 years until 2002, where the government stopped giving us grant, and we were asked to be self-sustained by issuing our own bonds, or we are relying more on loan repayment. And also, we are also obliged, if we don't have enough fund, we can take financing from from the banks. And also for PTPTN, we are under the Ministry of Higher Education in terms of policy and governance. And in terms of financing, we are under the jurisdiction of Ministry of Finance. So you see, there is perception-wise in PTPTN, because we are under Ministry of Higher Education, it looks like it is like a social financing. So I agree with one of the participants just now was asking that the mentality of the people when they were saying that this is public, this government financing, so we shouldn't pay back. So we are also facing the same psychology from the public, but we are always trying to tell the public we are no longer receive a grant from the government, whereby we are relying on the loan repayment by the students. So that's why it is the responsibility to all parties in Malaysia, for example, for the universities, for the parents, for the society, for NGOs, to help us to get back our loan repayments. Okay. Okay, something before I go to the savings part. So this is how we work. So in terms of PTPTN, we are mandated to give the financial and also savings for higher education. And also we want to promote financial equality. So in Malaysia, all students who have been placed, who got a place in the university, either you are, regardless of any religion, regardless of any races, regardless of whether you are able or disabled person, you are entitled to get the financing from PTPTN. And also we want to support for human capital. Because we need to remember, when these students being offered a place in the university, they are offered to gain a knowledge. This knowledge will be used to support our capital, for human capital for our countries. In this case, for Malaysia, because we need the skilled workers in Malaysia to be placed for us to be a developed nation in coming years. And this is our portfolio. As you can see, this is our 28 years of operation. So far, we are supporting, I think it should be different, because we are supporting 151 private, public higher institutions in Malaysia, 387 private institutions. We are supporting more than 12,000 courses offered in all the universities in Malaysia. Roughly, we are disbursing, so far we already have 4.1 million borrowers that we already upgrade their life, we already upgrade their social status from the needy one to the middle income because of the knowledge that they gain from the university. And also, as I mentioned before, on annual basis, we need to support 180,000 new borrowers for them to be able to study in the universities. And at the same time, we are also financing the existing students, 450,000 students. So it's a very huge number, a very big numbers. And also on yearly basis, we need at least 666 million US dollars, roughly about 3 billion Malaysia ringgit, in order for us to support this 450 and 60,000 and also the new 180,000 new students. And in terms of loan repayment, out of 7.7 billion that's supposed to be collected, so we managed to collect roughly about 5.24 billion, so roughly about 67-80% in terms of amount. But in terms of number of students paying back, roughly about 85%. And also, this is where the things come for my presentation today after this. This is where we want to encourage sustainable for higher education funding, for higher education financing. This is where the way forward for PTPTN. We want to encourage people to start saving, to have this savings habit. And we managed to do that since our launch of this savings scheme since 2004. And we already have roughly about 6.7 million accounts, Malaysian open with Simpan SSPN. And also we have roughly 4.7 billion deposits that have been given to us for us to manage and to give some dividends, and then for them to use this financing, for use this fund for them to finance their children's education. So you see, this is a very huge amount. Then this is why we need to think way forward, not to proceed, not to promote more on savings habit. So why? I want to share something about the challenges, about the financing that we are facing right now. So as simple as I mentioned before, at Malaysia, most students, once they are accepted, because our noble mandate, that is, no Malaysian is left behind, once they've been accepted into university with financial reasons. So this is why more people are relying heavily on PTPT and loans instead of the savings. So this is our issues. A second issue is that we are continue relying on government guarantee, because we are no longer receiving grants from the government, but we are issuing bonds, we are taking loans from the financial institution, but that loan has to be guaranteed by the government. So we are heavily depending on the government's guarantee and subsidies. And also, I think this is the world issues for every loan board, where the low repayments rate by the students. So we have crafted the strategies since 2021 until 2025 through our strategic plan books, where we have strategized to increase our education savings so that people will start saving more and more. By having more people to use their savings, there will be less reliance on the PTPTN loans. And also to increase PTPTN revenue. So in this case, we are having, I'm just sharing a little bit, we are having a collaboration with immigration departments. Those hardcore defaulters are not allowed to go overseas. We bar them from going overseas because they are not paying our loan. So why do you want to go to travel? And also we have, like Mr. Uganda was saying, from Uganda, for saying just now, a collaboration with the central banks. We are putting our borrowers, our beneficiaries, into the credit secrets, credit rating report, so that they are enabled, if they are not good paymaster, they have dues to us, so they are having difficulties in getting the commercial loans from the banks. And also we are working also with our inland revenue to promote, like Dr. Paul was saying just now, it's very interesting. I need to learn more about the income contingent loan repayment. I think this is very useful, so we are in the process of learning, doing that also. So this is where we want to promote. Just to share, we have started this savings scheme to ensure all the parents to our guardians to start invest for their futures higher education, for their children's future education, because no one else can help our children apart of ourselves as a parents or the parents to become. So this we are trying to get everybody to support for higher education financing in terms of let alone the government to do the financing in terms of subsidies, because we no longer receive a grant from government, and also we have to reduce our financing because it's too much already, and we need this. This is why the sustainability part comes in. So how do we able to do the collection? Because in our act, when we were established way back in 1997, we were mandated already. There is a function that we are able to do the collection, even though we are not under the purview of central banks, but due to this act, and this allow us to do the collection and deposit from the Malaysian parents. And the objective is to change the mindset of Malaysian from not to expect 100% fund for their children's higher education. So we want parents to start savings so that they are able to have a certain fund for their children. For example, if they start saving $20 a month, so because our Simpan SSPN product, parents are able to open the accounts upon a child newborn. Okay, 1 day old, they can open the accounts already. They don't have to wait until 7 years old or 10 years old. Immediately after the child was born, they can straight away open the SSPN accounts. And number 2, our savings is merely targeted for the needy one. We want to help the needy because we know in the future we are unable to provide the financing forever because of limited resources, and maybe sometimes towards end of times maybe we have to stop giving financing. So we want to prepare the needy one so that they are able to support their children's higher education financing through our savings account. And we want to ensure that the children will not be saddled with debts once they graduate. We want to create a whole life of Malaysian, empower Malaysian with the savings habit so that when they graduate and they don't be burdened with study debts, and they can start savings for their children. So the cycle will go on, and we will create a great community, a great society for Malaysia. And also to inculcate savings habit, because we know not many people like to save. They like to spend first. Once they get their salary, they like to spend first. So our strategy is to do the direct debit deduction, meaning that you should save first, and the balance of it, you do the expenses. Okay, this is why Malaysia, this is our selling points. Why they should invest, why they should put their money in SSPN. Wherever in Malaysia we have many banks, many financial institutions, they are also offering the higher education savings. This is where we are champion, we are become number 1, the higher education savings in Malaysia, and I think maybe throughout the world as well. The first one is tax assessment relief. We were given by the government for 8,000 ringgit, roughly about $2,000. Savings in our SSPN account, you got tax relief. For example, meaning that if your tax rate is 20%, just by deposit your money into our SSPN account, you are entitled for 1,600, let's say 20% tax rate out of that 2,000 savings of US dollar. So you get 400 tax relief. You are relieved from paying tax for 400. It's something good. And you can't get it elsewhere in other financial institutions. In other financial institutions, if you put your money, the more that you get is the dividend, that's all. But for us, we also have the competitive returns. We also give out dividends, and our dividends we are targeting to give dividends higher than the market rates. In Malaysia, roughly for savings account in financial institution, the dividends for savings roughly about 2.53%. Last year, our dividend is 3.65%. And this year, we plan most probably is going to be higher, more than 4%. So it is become attractive why they shouldn't save in our savings account. The third one is low commitment. You can put it as low as $4 a month. You can already open with our SSPN accounts. And okay, our saving, this is the best part, because all our savings is attached with the insurance. We have a great collaboration with the insurance company in Malaysia. And for every savings, for example, if you put roughly the minimum savings of 2,000, so every savings that you have with us is dollar to dollar, meaning that we pay the premium for every saving you put with us. For example, you have 10,000 savings with us. In case anything happened to you, you got into accidents or you died, your beneficiary will get another 10,000 for free, a part of the 10,000 that you have with us already. Because we pay the premium for the insurance to cover your savings in case anything happens to you. And with that 20,000 savings that your children will get, they are enable them to be able to study, to further their study in diploma, master, or degree without being burdened with debt. And of course, we are asking our government to guarantee. So it is another selling point. It is a guarantee by Malaysia government and also a Sharia compliance. And this is another one is a matching grant. This is where the governments, we have a very good collaboration with the government, whereby our government will give through PTPTN those parents' income earning less than 6,000 ringgit Malaysia, roughly about 1,500 dollars per month. Every savings in the account with SSPN, with PTPTN, we will give a dollar. You have $1, we give $1 for free. You have $500, we give $500 for free. You have $1,000, we give $500 for free, and up to $2,200 for free if you put in our accounts. And at the same time, your children being offered a place in their university. And this is to help the needy one, those parents' income below 1,500, to be able to secure a place in the university, and they will get this matching grant. And this is simple because our savings product, we have two, Prime and Plus. Prime is as good as normal savings account. You can put in $4 a month. You can open an account. You can close the account anytime you want. You can withdraw your money through any banks that we have cooperate through ATM machine. And this is the free coverage insurance that we are giving for the Prime. And the Plus is the insurance product that because this is our savings account, we are not obliged with the insurance requirement, meaning that those who have by the age of 18 until 65, you are able to put in your savings in our SSPN account without any insurance criteria. Okay. So this is another differences, savings and also the insurance. But because, and there is no medical checkup needed to get for the insurance. And if you can see, most of the insurance company, if you grow older, the charges, the premium will be higher, but not for this one. The charges will be the same throughout the years until you age of 65. Because we are not under the insurance company, we are under the savings company, under the Savings Act. So the insurance criteria does not apply to our product. So this is where I was saying, okay, 1,300. So for family, for the needy one, the family incomes below 1,300, and their children being offered a place in the university. For every dollar you have with us, we will give you back $1 for free. As I was saying, to the maximum of roughly about 2,200 for free, you know. You don't have to put. So meaning that if you start saving for your children, $10 a month when the children was born, and for 18 years, roughly you can get roughly about 2,200. And with this matching grant, we give you another 2,200, so roughly you got about 4,500, and that would be able for the needy parents to send their children to university without depending on higher education financing. So this is for plus, I was saying. So this is the package. The lowest one is $6 a month, but different coverage. So the saving part is intact. The saving parts, you got the dividends, you got the government guarantee, Sharia compliance, but the insurance payment is only $2. Okay? And it keeps increasing if you take the higher amount of installment. So up to $111 a month. But that one is coverage is roughly about 1 million ringgit Malaysia, but 250,000 in case of the depositors' death of accident. So this is how we give back in terms of the dividends. So when we get the deposits from Malaysians, so we will do investment. So the return from investment, we will deduct from the expenses for the premium that we're paying, and also the bank charges, and also for the promotion. And out of that net investment income, 90% we will give back to our depositors, and 10% will be there for the reserve fund. Okay? So we're trying to give the maximum in terms of returns. So this is where we managed to give, due to our good investment by our investment departments. So we managed to give out dividends last year 3.65%, which is above the market rates, and we are still yet have the 10% balance that we will put in reserve for us to give for the rainy days later. So next, a part of that savings account, we also introduced our latest product we call as My Wakaf or Endowment Fund. So we have launched this on 11th of March 2024. So this is another sustainable for higher education financing, a part of the savings. This is endowments. So how this endowment fund can attract Malaysian or non-Malaysian to put their money into this fund? Okay, the source of fund, we are getting the fund from Malaysia government because as I was saying just now, we have 6 million depositors, we have 4 million borrowers. So this is our customer that we are trying to target for them to give back the society through this endowment. And also we are open to public, and we also accept contribution from private sectors, for government, from local companies, and also for international companies. And once we get the fund, we will do investment, and out of that investment, 80% will be given back to the society through scholarship. Okay, we will give a higher education scholarship for the needy ones. So the more that we get from the public, we are trying to get from the government, maybe one-off from the government that can share, can put some allocation to PTPTN for this Wakaf fund. So we are targeting to get roughly about $25 million for us to put a start for this one. And hopefully this is going to be increased by after a number of years, and with increase of savings, with increase of this endowment, and with the reducing of number of financing that we need to give, so we are able to sustain PTPTN for the long term. And next one, the last one, is our newest services. This is where we have come out with our apps. We have started launch in 2022, and it is a single sign-on, and we are the first government agency in Malaysia to have this app with eKYC. Okay, know electronically, know your customer. And so far, we have managed to get our 2 million accounts open for these apps already. And the way forward for apps is to become super apps for PTPTN. So for these apps, this is everything's business. So we are equipped our apps to have a games, QR codes, all the insurance claim can be done through our apps, a calculator, and loan application. Okay, what's so special about the apps is all the application, loan application can be done through this one. All the offer letter we will give through the apps, and all the signing, all the digital signing also done through apps, and also for all the document to make it legal, you have to do the stamping. And we do have the digital stamping in these apps. And also you want to open a SSPN account, savings account, you don't have to go to our branches. You just download this app, which can got it through the Huawei, iPhone, or Android phone. And you can have your eKYC, you can open your account here, you can close your account here, you can transfer money, and we have a notification, and we have our own payment gateway. So it is all in here, it is easy to reach, you just download. So this is where our way forward to help people to save more with PTPTN, and also to express for higher education. So in PTPTN, we believe education is a very powerful platform for transforming empowered dreams of those from marginalized and underserved communities, and giving them the tools to expand their possibility of their new life. So this is the team from Malaysia, and I welcome any questions on how maybe we can benefit to each other. Thank you.
Thank you very much. We add some more claps for Mr. Abdul Majid. Thank you very much. Please take your seats, and the rest of the panel will join you. Let me now invite my panel. Professor Nascimento, you can also join as one of the presenters for this particular panel. Let me also invite Mr. Chad Pollock, who is the Vice President and General Manager for Visa East Africa, based in Nairobi, Kenya. We witnessed the exchange of MOU between Visa and the Higher Education Students Loans Board, so we can hear more through the panel discussion also what is coming. I would like also to invite Dr. Mariam Tambwe, who is the Senior Lecturer from the College of Business Education. She's a senior academician, and she has done some research in this particular area of expertise. Another member of our panel is Mr. Benedicto Cosmas, who is the Director of Planning, Research and ICT at the Higher Education Students Loans Board, the HESLIB. This is going to form our panel for this particular session. So while we are having our panelists settled, we can see some of the new insights which are coming from the two presentations which you have had. For the specific case of Brazil, which we looked at it as one of the most populous countries in the world with more than 200 million people. But what is interesting, the pressure for the demand of financing higher education seems to be a little bit different from our context, where the population of Brazil is less youthful, with aging and, of course, low fertility rate. So maybe this is something a little bit different, but also the structure of the higher education is also slightly different, with the private sector being very much on board compared to Tanzania. But we saw also some of the instruments by the government, for example, giving tax waivers for the private universities which are engaged in higher education, and maybe this is giving them some space to provide better services and improve their performance in higher education. For the case of Malaysia, of course, apart from the story of high repayment rate, but what is interesting is that they have a scheme for which parents, when they just get newborn babies, they start save for their children, and the saving will then assist in financing the higher education for their children when they reach the age of getting into the education. And there's even some insurance for this. If the parents pass away before the children are reaching the university, then the insurance will cover for the payment of their higher education and things like that. So there's a number of innovative things which we could see or hear from these cases. Let's hear more on the panel. Maybe we'll start with Mr. Pollock, bringing now the experience of learning from these other foreign models. Maybe you could share with us, what does Visa bring to Africa and maybe to Tanzania as something new and innovative, which you could say maybe this has never been there in the field of higher education student financing, considering also the MOU which you just signed with HESLB yesterday. Welcome, Mr. Pollock.
Thank you. So, first off, happy to be here. Thank you all for your time and attention. So I'll start with what Visa does, and just to kind of demystify it. So we're a global payments technology company. So we essentially connect businesses, individuals, and economies through the most innovative, secure, and reliable payment network. So the question that you asked, and when I looked at both your presentations, I saw examples both from Brazil and both from Malaysia that are right in line with opportunities I see here on the continent. So from the example in Brazil, there was a slide you had, I think it was like your third from last, that had kind of like the government body tying into the life cycle of the student, so I'll reference that as I kind of respond. And then for the Malaysia slide, there was the app that you showed on the features in the app. So first off, I'll say that there's a huge opportunity for digital wallets here on the continent. Because the population is so youthful, because many countries, especially in East Africa, are mobile first because of the deep penetration of mobile money, and there is a high smartphone penetration here. It makes it very easy to utilize tools such as digital wallets, because that allows a platform for either disbursements to come into an account that's linked through banks and linked through government bodies. Also, it allows traceability for any type of repayment. And then it also allows for additional features such as tracking your finances, money management, and then we can do some pretty fun things as far as gamification, as far as like increasing financial literacy and helping to uplift the skill set for students. So it's not just a tool to disperse payments and to collect payments, but also becomes an education platform where you can teach skills that last a lifetime, from money management all the way to investment and wealth generation. So that's one thing that we see. The other thing that we see here in East Africa, and specifically in Tanzania, there's a huge appetite for digital first. There's a huge appetite for plugging into the internet and using tools that already exist in the rest of the world. And the most obvious one I think that everyone talks about nowadays is AI, so artificial intelligence. AI can become essentially a game changer because it allows all those data insights to be combined into actionable procedures and strategies that can be used for students. So now you can look at payment trends, you can look at behavioral trends, and be able to spot where there's opportunities to either optimize, shift, or improve. And then I'd also say that, speaking more on data analytics, I think that now everyone's aware that data is kind of like the new gold, the digital gold. And there's a lot of opportunity there to really see where the trends are going, from spend behaviors to how students feel about digital payments, but also what are they looking for from their educational experience, which financial institutions can then plug into and use that to help optimize the interface of when it comes to loan opportunities between disbursements and collections. So that's what I would start with.
Thank you very much, Mr. Pollock. And I understand that you have a quick intervention outside the room, so I will pardon you to exit the panel. But maybe if there is any question for him, for Mr. Pollock, or for Visa, I could allow maybe one question from the member of the audience before I let him leave the panel. So if there is any, please raise your hand, and then you ask, he can respond quickly, and then he proceed with another important activity. At least we could hear him in the perspective of the panel. Anyone? I don't see any questions, so maybe I would probably let you proceed with the other intervention. Thank you very much. Let's clap for him for being with us here and share some insights. Thank you. So now I go to Dr. Tambwe. I know that you have done some research on these particular areas of higher education students financing, and you have had the two cases. So maybe you can draw the experience of the presentations, but also your own research experience of higher education students financing in the context of Tanzania, and maybe share some of the insights or lessons or takeaways which you have got from this presentation and also from your own research experience. Welcome.
Thank you, the moderator. For me, since yesterday we have been hearing this topic of student financing, which is very crucial for the equitability and access to students and for the economic growth. What I want to share from the lessons have had from Brazil and Malaysia is that we, Tanzanians and African as a country, we need to acquire entrepreneurial institutions, which does not only depend on the government subventions. We should devise more ways to increase other sources of financing students, especially due to the high demand of higher education. So if we keep on depending on the loans to be acquired from these loans board institutions, it will be very difficult to achieve that particular goal. And for the issue of education financing to be sustainable, we should think of other mechanisms to acquire more finances. I have had issues of crowdfunding, the issues of crowdfunding, which will assist more students to get finance to proceed with their higher education. There are other issues which I heard from the presentation from Malaysia. This is saving culture. Most of the parents expected to maybe to pay for the tuition fees for their children from primary to secondary education. And even if the parent has access to finance his or her child to higher education, he or she depends on the loans board to acquire the finance for it. So it's better for parents to be motivated to have the saving culture for our students or our children, so that when it comes to finance them at the higher level of education, to be able to finance them without any problem. Thank you.
Thank you very much, Dr. Tambwe. I think you have covered some of the things which are popping in from the two presentations, but also trying to put some emphasis on rethinking on our current model, for which it's the government that put the funds at the HESLB. Of course, those who are repaying also are contributing to the fund. Maybe there's another way, considering also the lessons which you have drawn from Malaysia, to look at that. Mr. Cosmas Benedicto, your directorate is very much responsible also for digital technologies. I think some of the key innovations which we hear at HESLB are normally you are in charge of, and for that perspective, maybe there will be some more and more innovative ways, of course, of collecting, but also managing now the loans, but also ensuring that the process is taking place smoothly. So you can draw some of the lessons from the two cases which has been presented, just to give us your own future perspective of how the loans board is prepared also to ensure that the collection process is becoming more efficient, but also the entire process of managing the higher education students' loans is becoming more and more useful for the nation. Karibu.
Thank you very much, Mr. Moderator. Yeah, first of all, I will recommend the presentations from the two presenters. Very nice, very insightful presentations. And we will all agree that as far as Tanzania higher education landscape is concerned, there is the landscape is changing dramatically recently, and this has been influenced by key factors, including rapid demographic shifts, economic trends, and public policy initiatives, including the famous fee-free basic education. And as a result, we are preparing for a very growing in terms of higher education loans demand. And in the next 10 years, Moderator, we are expecting that our budget could raise to more than 4.5 trillion Tanzania shillings, equivalent to about $2 billion US per year. So we have to prepare ourselves. And as we learn from both Brazil and Malaysia, there are diverse financing models that are happening there. And we have witnessed a lot of private sector involvement, including the new mechanism such as the income contingent loan experiment that is being done in South Korea, and I mean in Brazil. So how can we adapt these best practices in our environment and so that we strengthen our higher education financing? There are several factors that I will focus on as far as the lessons learned that we just captured from these two presentations. Looking at the Brazilian experience, we have learned that they experienced certain economic growth for certain periods, and these had a correlation in terms of the demand for higher education loans. And currently they are witnessing some kind of downturns in terms of GDP growth, and this has led to some dropouts in terms of financial stress in their higher education financing, because the number of higher education students are kind of like stabilizing. In the Tanzania context, in such in that focus area, we are seeing the same thing happening in our country right now. Economic transformation. We are kind of moving back and forth into middle stage and a bit back, but it's a step toward a middle income country. And as a result of this, middle class is going to increase, and the urbanization is going to happen. And this is correlating with the demand for higher education. And therefore, we expect, as a result of this, the enrollment will raise. The concerns then are we ready to capture that growth? The million-dollar question here, how do we ensure that the financing model aligns with the market demand in terms of what the labor market requires? Similarly, we see in terms of youth growth, we are witnessing population growth in terms of youth, and this will also bring up more demand for loans. How are we going to prepare for that? We are now moving to diploma financing, and that is another avenue that we are looking forward for. And looking at what the current policy is concentrating or focus on, it is also focusing on these kind of areas, improving the skills of the people in order to build a balanced skills at the end. How are we going to prepare for? How are we prepared for that? So there are several pathways that we are looking for. And in order for us to have those 6-8 arms, we really need to be more efficient. We really need to prepare that so that our systems can serve these multiple pathways and accommodate all that we think they will be, in the near future, they will be required. And looking at the Malaysia model, the savings particularly, Yes, as Tanzania, I know our culture does not incentivize savings. But if you look at the model from Malaysia, you will realize there are a lot of incentives in that model. We have to start thinking of that way. We have to start incentivize our systems so that people would be willing to save for their future education. So those are the things that I think we learned a lot from these two presentations, and I think we, as a strategist at higher education students, loans board in Tanzania, we are taking a lot from this presentation. Thank you very much, Mr. Moderator.
Thank you, Mr. Cosmas Benedicto, for your response. And just to reinforce what has already been spoken with the executive director of the loans board yesterday, and even the speech of the guest of honor showing how prepared is the loans board. But of course, still the discussion, as you say, the pressure is becoming more and more. You are improving the efficiency in terms of the disbursement, but also the collection. But at the same time, maybe there's a more of a thinking of how could you have other instruments of chipping in into financing, looking at the private sector, but also the parents themselves being prepared to ensure that this is not only the responsibility of the government. Now, ladies and gentlemen, let me now open up to the floor. We have heard the news stories of Brazil and Malaysia. The private sector dominated higher education system for which there is a role of government but also private sector in providing education. And of course, there are new ways of financing higher education, rather than just waiting for the student to come in, waiting to be financed through a loan, and then they repay later. The parents are already preparing in advance to make sure that their children will not have all these problems of, struggling to access the scarce resource which we have from the government. So you are free to ask the two presenters, but also the panelists ahead of me. Just be brief, introduce yourself and say your question to where you are directing it. I see a hand there in the middle. Let's just have the microphone available to those who are asking questions. Any other? You can raise your hand so that I can recognize you, please. So, yes, I see also in the front here. So I already have two hands. Questions, comments, just brief. Karibu.
The panelists and invited guests, good afternoon. I'm Athman Sanmin, the president of St. Joseph University of Health and Allied Sciences. First of all, I would like to thank Professor Paul Meyer for a wonderful sharing and experience from Brazil. But I have a question that relies on the sharing that stated that about 22% of public healthy education institution get the free user to attend the education. So my question basically is, do you consider the criteria of higher academic performance and special cause to give that free use charge, or you just consider the student in need? Thank you.
Thank you. Just the re-emphasization of the debate between merit and inclusion as part of the decision for financing. So I will have you answer, but let's go to the next question.
Thank you. My name again is Indiaeli Daniel Kaya, Deputy Rector kutoka Chuo cha Takwimu Mashariki mwa Afrika. Mine is not really a question, but just to congratulate the presenters. I asked the question as how do whether we can have a modality, a mechanism where we can encourage different people to contribute to higher education financing. And from the two presentations, is kind of we are getting some answers as to how we can have a platform, a mechanism, a modality where different participants from the public, individuals and institutions can really contribute in the financing of education. And here comes two things, as mentioned. The issue of, the saving could be very important. But another question is, where is it going to be seated given the existing legal framework? Can it sit in the loan board? Maybe what can we do in the point of view of the existing legal framework? Okay, that's number one. But number two, they are talking about the WACF. Is it WACF? Yes, the endowment fund, which is again really bringing that organized way of receiving contributions from individuals, from institutions, to financing this very particular, education, higher education system. So I think we have somewhere to start, and this is the two presentations has really like enlightened us and given us a starting point of thinking a way forward, of including, of motivating public to contributing the higher education system. But one role I know for sure that can fall directly on the shoulders of a loan board is creating awareness. The saving thing requires awareness. The contribution, the WACF, whatever the endowment fund, requires a greater awareness to people so that we can change our mindset, we can change our culture, and feel part of the process of financing the higher education. So thank you very much for your beautiful and very useful presentation, and I hope we as Tanzanians, we have taken a lot of lessons from these two presentations, and we have where to start. Asante sana na hongera sana.
Thank you very much. So, I see a hand there. Maybe I invite you. In the same row,
Habari za muda huu, panelisti ambao mko mbele yangu, ningependa nitumie Kiswahili. Naitwa Philip Amani, natoka IAA, Waziri wa Katiba na Sheria. Nilikuwa napenda kuuliza kama mambo matatu. Jambo la kwanza, tangu jana nilikuwa nasikiliza na nikawa nafuatilia kwa umakini zaidi. Katika yote mlioyaongea sijaona mpango kazi ambao umeandaliwa, yani kwa sababu hapa naona mpango kazi ambao upo hapa kwenye hii bodi ya mikopo, kwamba wanalengwa baada ya kupata hii mikopo na kumaliza wakaajiriwe ili ule mkopo urudi na uendelee kujizungusha. Ila sioni mpango kazi ambao kwamba utakuwa nje ya ajira, kwa sababu wanamaliza vijana wengi na sidhani kama ni wote ambao ile mikopo inarudi. Wengi wanaenda kuishia mtaani, wengi wanaenda kuwa mizigo. Sioni mpango mkakati, yani kwamba wakiwa huku wanaposoma kwa kupitia hii mikopo ikatengenezwa incubator. An example ni chuo changu ninachosoma, kina incubator ambayo ipo pale. Inalea innovation ideas ambazo ziko pale, na kuna watu hawapati mikopo, wanaanza kutoka pale walipo na wanafanya zaidi. Kwa hiyo nilikuwa napenda kujua au kufahamu kwamba mpango mkakati ambao upo nje ya ajira ambao utawasaidia vijana baada ya kumaliza kutokana na hii mikopo wanayopata ikarudi na wengine wakaendelea kunufaika.
For that remark or question, so for those who didn't get the Swahili part, he's concerned with, okay, so we have the discussion more inclined to making more and more access to people, to students having access to the loans or to the finance. But then there is another problem of when they graduate, they don't get the formal employment in the labor market. So how are we prepared to prepare them to either self-employ or at least to start creating opportunities for themselves, just not depending solely on the employment? So he kind of like also mentioned the example of an incubator in the university, which would probably prepare the students while they are studying to have skills which will enable them to self-employ, and that will ensure that they are also in a good position to repay the loan later, but also to have sustainability of the career and employability within the labor market. So that was more the emphasis of his question. Any other hand? I don't see much hands. Is it that you are not enthusiastic about discussing this? I think for higher education institution, for private higher education institution, there's something different which was tabled here. But of course, for the policymakers also, the idea of saving and parents being part of saving, but also crowdfunding, the Harambee, Kenya Harambee type, but not necessarily only people within a certain community contributing to support a certain parent to provide the fee for their children, but every parent for their own children start saving for that. And we are all parents other than also being stakeholders of higher education student financing. So how do we reflect on these models which were tabled by the two country cases? Maybe we can reflect and not necessarily just asking questions to the panelists, but some policymakers who are here also can reflect on what does this mean for our own country in the coming future. So before I give it back, I see the hand from Dr. Mari. I think you can also chip in to contribute to the debate, and then I'll go back to my panelists.
Thank you, moderator. I'm very moved with the insights from Brazil and Malaysia. But for me, I just wanted to expand the discussion in terms of thinking of what it takes, extending from what Dr. Kahaya has said. What reforms do we need, if at all we want to imitate the Malaysian model? You see, they are a fund which allows collects deposit, so they have savings. They also offer TACAF, which is an insurance product, but they also give incentive for people to save by providing reward, dividends on the same. So for us to do such a thing, we need reforms to accommodate the same in the legal and regulatory frameworks. Because for Tanzania, for an institution to accept a deposit or to collect savings, it has to be a bank. So it has to be licensed as a bank or a financial institution. So in absence of that, in terms of the legal framework alignment, that cannot be done. For an institution to offer insurance, you have to be licensed by the Tanzania Insurance Authority, or you have to be an agent of someone who has been licensed. So either a bank through bank assurance or an agent through agent's agreement. So, and instituting a culture for parents to save. On the other hand, people are struggling with income to sustain their needs, but it does not mean that those who are saving in Malaysia, they are high income parents, but I want to believe they are either middle income or lower income parents, but they have reached to a level of appreciating the importance of saving, so that whether they are alive or they are not there, the fund will take care of their children. So I think this debate is broader because it touches a number of stakeholders, including policymakers and regulatory bodies. So I also wanted to enlighten the same.
Thank you, Dr. Mari. I now see a hand. Karibu.
Thank you. My name is Vuyokazi from South Africa. I have 3 questions. My first one is around the savings component. So what happens in instances where maybe due to attrition or students end up not going to the higher institutions? Do you return the money back? How does that process work? The second one is around the distance education, and I think that was from Brazil. In terms of your products that you are offering, is there differentiation between a student who is in your traditional institution versus your student that will be in a distance learning? How do you look at the service offering there? And then the last one is around the income contingent loan repayment. If you could please just expand on that in practical terms, in terms of how do you guys operationalize that? Thanks.
Thank you for your questions. I hope they were clear to the panelists or presenters. I remember the one for Brazil, distinguishing those who are in regular programs and in distance education. How do you manage, and is there any different kind of interventions on that? Maybe you can re-emphasize on the two other questions, the repayment of the funds from the universities or institutions as well. That is a question for Malaysia. The first question was, I'm sorry, can you give her the mic back, and then I'll go now to my panelists to respond.
Okay, thanks. The first one was on the savings plan. So for students where maybe they die or they end up not going into the institution and they've invested at an earlier age, what happens to those monies? Does it go back to the parents? How do you make sure that you redress
Now it's
that?
clear. So when the parent saves and the children are not having the opportunity to go to the higher education, where does that resource go, I think? So maybe we can start with you, Mr. Abdul Majid, and then we proceed with Professor, and the other panelists can also respond.
Okay, thank you for asking that kind of question. It's very good questions. So for SSPN, our product is open to all Malaysian, and regardless whether you intend to study or you want just to save for dividends, okay? And once, let's say, the students didn't get a place or died, or maybe they don't want to further their study, so they can close the accounts, or they can maintain the account with us until the parents' age of 65. Also, the students, the age of 29, and they can gain the benefit of the dividends and also the insurance that we are covering for them. Okay, number one. And for number two, again, and I just want to add for Dr. was saying just now, in Malaysia, yes, we have the needy parents. So the intention of our savings is to help the needy to prepare for their children's future. I think it's just not a matter of how much money do you earn, but it's all about the habit. In Malaysia also, we have a lot of parents who didn't have $250 US as emergency savings. So it is very alarming. So we want to create a savings habit. So even though you are earning more than maybe a high income group, but if you don't have the savings habit, so you won't save. But those, the needy one, those, the lower income group, if you start having the savings habit, and in the future, your children also will start sharing the same habit that you have. So we want to create the whole society of empowering Malaysian with the savings habit. I think this is the problems with all people. It's not like in Malaysia alone. It's not like we have higher salary for our graduates, but for me, I think this is more on habits. So what we are doing is to create the saving habit. They feel good factors when they start savings, and when there is a needy time, when they need the money, and the fund is there. And also to add some more for our Wakaf fund, to encourage people to do the endowment for our Wakaf fund, we also, through our income tax, we give a tax relief, tax deduction of 10%. This is to entice the corporation, the public, the people to give back the society through the endowment. So we are giving the 10% tax deduction for those institutions, for those individuals who are putting their money with our My Wakaf or endowment fund. Okay, thank you.
Professor, you can respond, and I think that will be the last winding up also for the panel, because we are catching up with the time. Thank you.
Okay, thank you for the questions. I'll try to respond quickly. Someone asked about whether the places, if I understood correctly, the places in the public sector takes into account only merit or also need for the students. The public universities in Brazil, they are selective, okay, but they, in this selection process, it's also considered like affirmative actions of different forms, but the major one is part of the places allocated for public universities, at least 50% of them, they are allocated for students from who studied in public schools in basic education. Public schools in basic education are the majority, but they are like the wealthier students don't go very often to public schools in basic education. So that's a way to promote access for disadvantaged students. And there are also quotas for the students coming from the public basic education, and in terms of income as well. So that's the idea. And once they are studying the public sector, they need students. They can access some student aid. For students studying the private sector, there are also some kind of student aid provided by the federal government, but limited access. How to encourage people and institutions and organizations to donate? I think I will not add much on that. It's probably change institutional arrangements, but there is also a cultural thing. In Brazil, it's not common also to have endowment funds. That's something relatively new. It's a challenge to incentivize institutions and people to donate for such funds. We have changed the law in maybe 7 years ago to make these more attractive for investment. And I'm not sure if we do provide tax incentives also. I think we do, but I'm not quite sure. But it's something that's still residual in Brazil, maybe because of cultural issues. Someone asked that, okay, we provide loans for the students, but then the students, after graduating, they might not have jobs and stuff. I won't concentrate much on that because it's a very important issue, but demands considerations on different areas and how to make the economy more dynamic. From that up to changes maybe in the university curriculum and all that, I think I apologize, but I will not concentrate much on that. And I had a question on the income contingent loan operations for the repayments, right? This is, in the beginning, can be complex, and even in Brazil, we are not ready already to implement that, fully implement that. But in places where it works, I know a little bit about Tanzania, but very little, but I know more about the experience that has been taken for decades in Australia and in England. And the idea is that you do need an efficient way to collect repayments. Usually, when in countries where you have efficient tax collection or social security collection, you can use these arrangements to collect income contingent repayments for student loans. That's actually what we're trying to do in Brazil, but there is some resistance to include repayments for student loans in these arrangements. But with the evolution of technology, it should not be a huge problem for governments, because governments, they do have the enforcement to collect either taxes or social security repayments. The challenge will be for developing countries, including Brazil, is how to collect repayments from graduates that are not in formal jobs. Yeah, so that's the major issue. But it's a matter of technology to collect the repayments, and it's more efficient when you use the government arrangements, because the government has the enforcement to collect repayments for the things. So if you can use those arrangements in that enforcement to collect student loan repayments, that should work reasonably well. And it's in equity terms, I think it's better for students because of the insurance features of income contingent loans. You don't have to put students on credit records, things like that. You can simply collect repayments from payrolls and other mechanisms. And when the student doesn't have income, you can simply suspend the repayments while the student does have income.
Okay.
And that protects the student.
Thank you.
I hope I have responded to all.
Thank you very much.
Finish my.
Yeah, please pass on to Mr. Cosmas Benedicto. Just react quickly to some of the issues which pop into the discussion, which you could respond to. Thank you.
Thank you very much. One concern has been well explained by Dr. Peter Murray, is on where will it be seated as far as the savings scheme is concerned. That's the process, and I think my colleague, Dr. Murray, has explained that. There was a suggestion about the incubation centers and everything. I can say that we have started exploring those kind of pathways, and we've already started a trial, and some of the graduates are benefiting, very few of them, but just as a trial. But I think it's a very good pathway that we are taking on, and for sure in the coming years that will become one of our new channels that we are taking on in order to upgrade skills of our graduates. To wind up, Mr. Moderator, if you look at the two countries, the most common thing that I can observe here is that they are having a very good identification system in their countries, and therefore they can integrate their systems with the government systems. It's only that sometimes it's hard to reach an agreement with some of the institutions within the government. But for us, we have an opportunity because the sixth government is kind of like has a very good appetite of integrating our databases. The only thing that we are facing as a challenge right now is on the effectiveness of our integration still. We've just started using our national ID. I know it takes years for it to become effective. And now we've already started talking of Jamii number, which is coming from the point of birth. And that is also a very good opportunity for us to start integrating our systems. And given that, we have a very good, bright future, so that in the future our funds will become even more sustainable in terms of attracting more financing and attracting private investors, because those kind of arrangement kind of raising the confidence of private investors. After saying so, thank you very much, Mr.
Thank you. So we finish with Dr. Mariam Tambwe so that we can conclude our panel. Karibu.
Thank you, Mr. Moderator. Most of the questions or doubts posed by Dr. Murray is an eye-opener for the establishment of the National Education Savings Scheme after following all the regulatory and legal issues to be established so that it can take care of all the questions you have posed. Another thing from the two discussions which I have had is about the digitalization of our procedures and financing mechanisms, so that it can be easy for the institutions and the students to apply the technology in financing issues. But the final issues which I want to add is about the public awareness and financial literacy campaigns to be taken to the public about the financial issues, so that all the things like, or activities like the saving issues, the financial inclusion should be spread to a lot of people around the country. Because some of this information is found to the people who are in the urban areas. But for the people who are in the rural areas, they don't have a lot of information about financing and issues about loans and so on and so forth. So it's better to spread awareness, especially to the rural areas. That's what I want to add. Thank you very much.
Thank you, Dr. Mariam. And that concludes this particular panel and the session which we had. Let's clap for the wonderful panel we had. I would like now to allow them to take back their seats. And thank you very much for sharing this experience. Yes, the group photo for the panel. Please, photographer, quickly. Distinguished delegates, participants, now we will have the last presentation. And after that presentation, we will have the final panel, and we will get to the end of our day here in the venue. So I would like now to introduce the next presentation titled Exploring Korea Hybrid Financing Model, Resource Mobilization, Talent Programs, Collaboration, and Collaborations, which will be presented by Mr. Gun Lee, Head of Communications at COSAF in Korea. Let's clap for him. So you have about, I will give you 25 minutes and then we go to the panel.
Hello, good morning, everyone. Let me just thank you for having us such a great conference today. Above all, I sincerely congratulate the HLSLB on its 20th anniversary. My name is Gun Lee. I am from the Korea Student Aid Foundation. Before I was appointed to this position last year, I had been in charge of student loan and scholarship since COSAF was established in 2009. When COSAF was about to launch the first student loan program, I moved to this company from a commercial bank. That's because I wanted to develop Korea's student aid system into a very decent program that is linked to the finance, not just distributing scholarship or grants. I feel like it was the best choice in my life. And then, today I start by explaining about COSAF and our programs. It'll be in this order. Overview of COSAF and the past and the present and our future. COSAF was established in 2009 and marks its 6th anniversary this year. Korean higher education can be considered divided into before and after our establishment. Back then, college tuition was paid for by only individuals. Before the start of industrialization in 1970s, Korea was an agricultural society During this time, parents used to sell livestock to pay for their children's tuition fee. They mostly sold cattle. I think one cow was worth one semester's tuition fee back then. After establishment, students can receive higher education without any burden. In other words, I'm sure the COSAF is a great milestone in our education. Next, I'll explain our history. From 2009 to 2012 was the beginning period. At this time, we started with student loans and national work-study program. Now in 2025, we have expanded our scope of our business from elementary school to high school and middle school, as well as university. So, our budget has increased to about 10 trillion Korean won. That is 7.5 billion US dollars as of 2024. It accounts for 10% of the Korean Ministry of Education budget. Our slogan is COSAF with the people, which connects hierarchical ladders. That means that we will promote social mobility and create a fair society by supporting students in economy difficulties to get higher education. Our purpose is to cultivate human resources needed by the state and society by efficiently operating the student support system and programs so that anyone can have access to higher education depending on their will and ability, regardless of economic conditions. The COSAF consists of 4 divisions and 20 departments and 9 regional centers. We organize our organization every year by reflecting the directions of society, the state administration, and management policies and employees' opinions. The number of our staff is about 440. It has increased by 5 times in 16 years since 2009. There are 4 major businesses: national scholarship business, student loan business, dormitory business, and donation and talent development businesses. Our student aid program consists of 33 programs, and there are 23 financial support programs and 10 non-financial support programs. The beneficiaries of the financial support programs are divided into college and elementary, high, and middle school students. Student loans, our college student support program consists of direct loan and income contingent loan, ICL, and rural students loan, and lifelong learning student loan, and West loan. We are financing loans by issuing corporate bonds in the financial market in Korea. The scholarship program consists of need-based and merit-based and competence enhancement. We also run the name a Blue Lighthouse Scholarship, which provides scholarships with donations from individuals and companies. We are reducing our students' burden by running government grant programs. The amount is determined by the students' household income levels. The budget for 2024 is about 4 trillion Korean won, that is 2.8 billion US dollars. There are about 985,000 grant recipients. As you can see on this slide, there are 3 types of programs. The first one is the government government grant type 1, we calculate the recognized amount of students' income and gives grant according to their income segment. The amount is shown in this slide is the maximum amount of a student can receive in his or her section. Students must complete 12 or more credits in the previous semester and have a GPA of B or higher to receive this grant. In addition, the student's aid section must be 8th section or less. The second is multi-child family grant. We are currently trying to respond to the problem of low birth rate in Korea. The 2024 budget is about 1.2 trillion Korean won, that is 700 million US dollars. The third is government grant type 2. This program is supported according to the university's own criteria and efforts, such as lowering or freezing the university's tuition fee and providing scholarships. The 2024 budget is 430 billion Korean won, that is 300 million US dollars. This program is characterized by different criteria for each university. We distribute funds to each university, and the universities provide grants to their students. The program includes a separate budget for local students. The local talent grant is aimed at decreasing the outflow of the local students to the Seoul metropolitan area and fostering local universities. The 2024 budget is 80 billion Korean won, that is 56 million US dollars. This slide is about our financial aid application process. We are operating through an only online system. Students who want to apply for financial aid should fill out the application form on our website. We can apply for both students' loan and grants with a single application. We analyze the income and assets of the students and their parents. We collect all the information from computerized information links with many institutions and financial companies and universities and calculate their income segments. Merit-based aids have many different types of programs, so I will give a quick explanation and move on to the next slide. The Presidential Science Scholarship for Graduate is newly launched program in 2024. This is for graduate students who have research capability and growth potential in science and technology. The budget is 3 billion won, 2 million US dollars, and 120 students became the beneficiaries last year. This is about work, study, and travel program in Japan. We also launched this program this year to support university students with Japanese training and hands-on industrial field experiences. 50 college students became the beneficiaries last year. In this slide, I will explain the system for calculating the student aid sections. This is our income asset checking system, and we obtained the patent in Korea in 2023. By linking the computerized information on the Supreme Court, and Ministry of Public Administration and Security. We closely identify household members and investigate domestic and foreign income and assets. The student support section is an important screening criteria for national grants. With the consent of the student and their household members, the monthly income level is calculated by reflecting income, asset, and all the debt. This is divided into 10 sections, and then government type 1 is distributed to the students. The following is about our beginning periods. In this slide, I explain National Work Study Scholarship. Unlike the other programs, this program provides scholarship in exchange for students' labor. It provides opportunities for low-income college students who are struggling with high levels of college tuition and living expenses. This program can also provide employment competency and job exploration opportunities through various work experiences. This year, the budget for this program is approximately $300 million. This amount is enough for about 130,000 students to participate. This program is jointly run by the COSAF and Ministry of Education and universities and many employing institutions like company or public institutions and so on. Students' loans are largely divided into two programs. The first is direct loan, is a program that pays off loans in installments for up to 20 years. The second is the ICL, is a program that starts repayments after a student gets a job. National Tax Service Agency makes a repayment by withholding from the debtor's salary. The current student loan interest rate is 1.7% per annum. The government compensates for the loss incurred by the difference between the procurement interest rate and the loan interest rate to raise student loan funds. The following slide is the status of the reduction of tuition burden due to the financial aid of COSAF. In the past, the student tuition burden rate exceeded 60%. But now, since the establishment of the COSAF, the burden rate has been reduced by half. As of 2024, support from the government and universities and accounts for about 68% of the total tuition. And the individual students' burden accounts for about 31 or 2%. Our whole process takes place online, so we also obtain a business method patent for the student loan procedure. This is about our current status of developing periods. We are working to solve many social problems in Korea now. The key problems of Korea faces are low birth rate and aging society. COSAF is working to address these issues through multi-child scholarship and lifelong learners support programs. Especially, we have been supporting lifelong learners since 2023 with launching credit. I'm sorry. credit bank system student loan programs. I'm sorry, sometimes it doesn't work. In order to resolve the opportunity imbalance caused by the gap between the rich and the poor in education, we contribute to narrowing the education gap. The first is supporting scholarship starting from the elementary school students. The second is providing a place of learning with helping unprivileged students. There are lottery fund Dream Letter Scholarship, educational voucher projects, and Dream Scholarship. And as for mentoring, Lottery Fund Dream Letter Mentoring and College Student Talent to Volunteer Camp, University Students Youth Education Support. Support University Students Youth Education and support scholarship. Mentoring scholarship for multicultural and North Korea defectors students. Two is the problem of unemployment and youth housing crisis. We are running 2 youth dormitories and we are planning to open a new one next year. Those help us enhancing housing stability and support their talent development. And we also have built 5 startup dormitories nationwide for students' housing and entrepreneurship. We offer residential and office spaces and startup support programs. Those are for free. Next up is about our future of the COSAF. I want to call it revolutionary period. Actually, we have been promoting the improvements related to the social problems and highlighted by the government. But now we are transforming into an organization that proactively takes care of the young people's difficulties and provides them with comprehensive support. A growing number of young people are suffering from mental illness due to the various social problems and stress such as unemployment. In order to cope with those problems, we are running the mental health program and gradually expand it. This program starts with paying attention to students' mental problems. We are trying to support the students with psychological counseling, treatment connection, and daily recovery. And due to the recent rapid increase in rental costs, more and more students are having difficulties in housing expenses. To help them, we are working with the government, public institutions, and private companies to build and operate dormitories and try to expand them further nationwide. We have operated one-sided means of publicity using mass media. This can be somewhat difficult to accurately grasp our customers' needs. We are currently preparing for the next generation of a computerized system, combining and analyzing student financial aid program information, integrated customer information, social trend analysis, personal characterized information, respond to campaign, and pattern analysis. We will provide a customized service that is centered on each customer in the future. As we operate a 100% online-based system, it is most important to strengthen our system security above all else. We are trying to improve our system in a way that enhances system security and also increase customer conveniences. Through these efforts, we'll be helpful institution in the life cycle of the people. COSAF was founded in 2009 to provide financial support for college students. Through continuous innovation, we have evolved into a lifelong education support organization, ranging from elementary school students to graduate students and job support for students. Your dreams will come true. This is our catchphrase. We will constantly strive to support Korea students to realize their dreams and grow into talented people in our society. This is the presentation I prepared today. Thank you.
Thank you very much, Mr. Gunn, for insightful presentation. Ladies and gentlemen, we have seen how things are different from other parts of the world. Here you see even COSAF is engaged even in supporting student dormitories accommodation. So to make living costs easier for students is part of the financing as well. So we already have him as a panelist, and the colleague can also join. Would also invite and introduce also other panels for this particular panel. Together with us today we have Dr. John Machai, who is the president of HEFA. We heard from his speech yesterday, but he is also going to share insights in relation to these experiences. Let's clap for him. Are we tired? Thank you very much. I also have in my panel Professor Nelson Boniface, the Deputy Vice Chancellor for the University of Dar es Salaam, responsible or in charge of research. Let's clap for him as well. Karib sana to the panel. And we have also Professor Lugano Kusiluka. He is the Vice Chancellor for the University of Dodoma. Professor Nelson is the Deputy Vice Chancellor for the University of Dar es Salaam, responsible for research. Professor Kusiluka is the Vice Chancellor for the University of Dodoma. So I will start with the leaders of the two leading or largest academic institutions in Tanzania. You have heard the story of Korea, but throughout the 2 days, the discussion was very much centrally focused on the Higher Education Students Loans Board, but maybe it's time now to hear the story of the higher education institution. I know that two of you, up to the position where you are, you have had some positions which gave you the opportunity to engage on academics and even managing issues related to students, so you have a very good experience with how handling students, their finances, and their welfare is about. So maybe I can start with Professor Nelson there. Tell us, of course, reflecting on the presentation from South Korea, and based, of course, on your experience of being a leader in a major academic institution in the country, what is your take and what are the takeaway messages from you in relation to these issues? Karibu.
Thank you so much. Good afternoon. Actually, all the presentations were so insightful and interesting. I'll start with the last slide from the Korean presentation on youth dormitories, which is actually lacking in our system. And this is costing our universities, including, I think, my colleague here, because we have similar situations. Our universities, University of Dar es Salaam, and I think other public universities are 100% owned by the government. So situations are similar. If I start with the youth services like accommodation, we have challenges there where universities are forced to subsidize the accommodation or rooms because the renting rates are low, starting from like 500 to 800 shillings for undergraduate students. Therefore, if you have, like our case, a number of students reaching to 12,000 who gets accommodated, we have a deficit of like 1.5 billion per year that we have to subsidize to make sure that these students get services in that area. Now, for the area, for the same area, if I see the model of supporting students in South Korea, the funding model is offering youth dormitories. And this could be attached also from the loans board to our students like they do in health system, where they give this 50,400 shillings per student for health system. So accommodation could be actually also supported in that context. And another thing that I think we should think of is the founding of the act that is actually establishing our loans board of 2004. It is aiming at supporting loans, but I find the hybrid model from South Korea, which is actually built on comprehensive financing support for their students, not only on loans, but also grants. And this could be actually important to our system. And what I propose here is to revise the act. It has been there for many years, 2004, and now our country is going to Vision 2050. With an act of 2004, I think we need to revise it to align with the Vision 2050. TCU, I think they are revising their Universities Act. So we need also to revise this act so that to accommodate these things that we have seen being presented. I will break and then I will continue later. Thank you.
Thank you very much, Professor Nelson, for proposing reforms which will enable the loan board not to solely just focus on loans which are given to students, but to have a hybrid model. But at the same time, you're also proposing to relook at other interventions which will make costs for students easier, like accommodation. And for public universities, of course, this is a policy area for the government to think about. I know that HIT is intervening in some infrastructure, not necessarily on students' accommodation, but yeah, this is a very interesting area. To you, Professor Kusiluka, you can also intervene on that particular angle as well. Karibu sana, Prof.
Thank you very much, Mr. Moderator, and let me acknowledge all the presenters since yesterday. To me, this was a great master class, I should appreciate. And it was quite an experience. And as a public university, my colleague has already said, we are partly guided by some public laws, but that has not actually excluded us from being innovative. One thing is for certain, that when we have a large number of students, like currently at the University of Dodoma, we have about 35,000 students. We are talking about talents, many, many talents. And we have not exploited them fully. And these are young talents, these are the people we're talking about. So as a university for now, first we've been challenged by the government that we must actually be self-reliant in most of the things we're doing. And therefore what we're doing now, we've finalized establishing a subsidiary company. And our aim is that all those good ideas from our students should actually be given an opportunity to be experimented and products be produced, and let them actually, through the subsidiary company, sell their products and self-finance. That's one idea we have for now. and very soon it's going to work. And secondly, through the subsidiary company we have already conceived a number of big projects which are going to be funded under the private-public partnership model, and which is actually according to the government policy. And we have already presented these ones in various government bodies. And we believe through that way, we're going to be attracting the private sector to invest with the university. And in that process, we are going to be not 100% be dependent on the budget of the government. And that's going to help us to actually engage our students and make our universities also more autonomous in terms of how we fund our activities. Certainly, the government has a role because we're public universities, it's going to continue funding, but we think we need some more independence in the type of sources of resources which we need. Because currently, let me admit that for most universities in this country, we actually depend a lot on the presence of students. And if the students are not there, we cannot have 100% assurance that we can manage our budgets. And that's the headache of every vice chancellor, that's the headache of every deputy vice chancellor and the management team. So that is important. But from what we are learning from the experiences from our colleagues, I'm looking for a future body financing higher education in this country not being so much attached to the government. We are learning that these are supposed to be autonomous institutions, and let us encourage the private sector to participate in this financing. And I was thinking, we are talking about an agricultural bank and the other types of banks. We are not talking about an education bank. What is the problem if we conceive a bank where people or institutions are going to inject money and people will come and seek for loans? The current setup has a bit of political connectivity because now the loans board is a well autonomous body, but it is still so much supported by the government. And if we establish an institution like a bank, it's still going to have the government as a major shareholder, but there's going to be a question of respecting this institution, that if you go there, you want a loan for education, you should not expect that you will not repay, because it is a bank. You have to repay. And people will start actually thinking twice. Do I need a loan for this one? Or do I have to raise money from my family or other types of sources? Because we should also appreciate that before the loans board came in, people were financing education, and there were no challenges. Now we have this body, but yet a significant number of people are defaulting. Now, should we allow people to continue defaulting, or should we make people more responsible? And yesterday, we had the experiences of His Excellency President Kikwete, and then the experience of the regional commissioner. Those were extreme differences. The other one was talking about, even though we are not getting loans, but we are actually contributing a lot to our education, to spend 18 months in a combat. The other one was talking about waiting for what the ATM will deliver, and then there is a boom, and everybody in the town knows that there is a boom. That sense of responsibility, we need to restore it. And we know our students, not all of them actually, when they get the boom, they spend it wisely. If they go and get a loan, which is not immediately connected to the government, they will spend that loan better. Let me end here for now. Thank you.
Thank you, Professor Kusiluka. I think you brought in a different angle of the insight in terms of just being more innovative beyond relying on the higher education students loans board, and here taking from the reforms of the sixth government of President Dr. Samia, Her Excellency, and of course with the management of the Office of the Treasury Registrar, the urge for the higher education institution to become financially more and more self-sustained, and of course considering also that the fees are more inclusive so that you have lower fees for which is accessible. You are trying to engage with the private sector in investment, collaboration, so that you can generate revenue for the institution, but also improve the infrastructure, and in that angle you are contributing to make services more available to the students. Now, back to you, Mr. President of HESA, Dr. Machai. Maybe you can draw on the Korean case, but also what will be probably the experience in Zambia, and reflecting also for Tanzanians, for the audience here. Karibu. Welcome, sir.
Hello. Hello. I think drawing on COSAF case, you can see when an institution has a huge resource endowment, what they can do within a short space of time. The challenge we have, especially in Africa, these student financing authorities run these schemes on a contributory basis. Most parents are becoming irresponsible. They don't want to contribute to education costs of their children. Half the time, most university students are double orphans, but when graduating, their parents come to celebrate with them. So this is a very unique challenge that we have in Africa. On the other hand, I think if you look at COSAF, their financing model is very dynamic, involving a number of institutions. This also speaks to their standing in terms of the legal framework. What do I mean when I say that? For you to attract external funding, you have to look at your legal standing as an institution. You find that some of our member countries are still operating under government departments. I don't think you would engage in attracting a lot of external funding if you are operating under a government department. It's not possible. He was talking of a corporate bond. For you to engage in raising a corporate bond, your legal standing should be different. So it's one of those things we appeal to our national governments to try and ensure that the legal standing of student financing authorities is quite firm and very independent, to ensure that they start attracting external partners. There are quite a lot of good lessons to learn for the future from COSAF. We need to start adapting our education systems to demographic changes to ensure sustainability. Most of our universities are over-enrolling, lecture theaters are overcrowded, yet there are several options to deliver learning, taking advantage of technological development. I think this is one area that needs to be addressed. Also, I picked up something on mental health support for students. This is a reality. But how do we work with universities to ensure student financing authorities deliver this to the students? I think we need to work closely with our university partners. Education must evolve with technological advancements to keep up with future job markets. I think there's NREN research. In Zambia, we call it ZAMREN. This is an institution that is supporting a lot of colleges and universities in terms of technology, issues to do with internet capability, and also distance learning. So we need to leverage on these institutions. I think it sits in Southern Africa. We have one office for East Africa and I think West Africa. We need to leverage on this to have different ways of delivering education other than crowding our institutions. And this leads to destruction of infrastructure because of pressure. So universities need to address this. I picked up something again from COSAF. Work study programs and employment-linked scholarships help bridge the job mismatch gap. This is very important. I visited Morocco last year. When accepting students in TVET colleges, they use artificial intelligence to see which programs are suited to a particular individual. This is very good. Sometimes we're admitting students in programs where they're not even suited and they start struggling. This is a problem. We need to catch up on that. And also, graduate employability is a big concern. I think in Zambia it's taking 5 to 6 years for a graduate to get a job. And this impacts sustainability of the student revolving fund because we are churning out graduates who want white-collar jobs, which are not there. So it's a big problem. I think University of Cape Town has a good program of enhancing graduate employability through internships and mentorships. So I think it's something we can learn from. Affordable student housing to address accommodation challenges. This is also a good project, but you need seed capital. Where do we get seed capital from? The support of startups. Some of the graduates are very intelligent. They want to start up their own businesses. If they are supported with workspace, that is good. But again, we've seen PPPs. We've seen PPPs not working for universities because of the way they sign these contracts. That's the problem with the human beings. PPPs are well-intentioned, but if the people behind them have bad intentions, you lock yourselves for many years and the gain is not there. It's one of those challenges around the PPPs, though the intentions are good. What should happen to student financing authorities? I saw from Malaysia, the monthly grants stopped. They are now operating as a fund. I think this is good for student supporting financing agencies because once you have a fund, it comes with rules. You are able to make investments and whatever you're supposed to pay the employees is a percentage of the total income you make from investments. I think we hope most national governments should adopt this model. It makes people work very hard because they get a portion of the income to support operations. But unemployment is really causing a big challenge for these revolving funds because government is a major employer in most countries. If government in a particular year do not recruit anyone, it becomes really a big challenge. I think there's a lot to learn from our colleagues in South Korea, though they have a challenge of low birth rate, which is not a problem for us in Africa. It's very unique. So I think these are some of the few points that I picked from the Korean presentation and also the Malaysian one regarding savings. The savings challenge is very clear. I recently received a letter from the Attorney General in Zambia that you cannot operate a savings scheme because you don't have a license. So, but there are solutions around that. You can run a third-party scheme using a bank. It's possible. There's no harm with that. There's also a possibility of running a collective investment scheme. So there are several ways we can work with commercial banks to run a savings scheme. it's possible. Thanks. That's what
Thank
I
you.
had.
Thank you very much, Doctor, for your intervention. I think you have drawn a number of lessons and experiences from COSAF with the reflection of our own contexts. And one important area you pointed out is the possible reforms in the legal and regulatory framework for our fund management schemes to enable them to also get funds or resources from other sources apart from the government, employability for the graduates and so. So I'll open up for a few questions. We don't have so much time, but we can have a few questions for this session for the panel. I already have one question online for Mr. Lee, whether based on the COSAF experience, the merit-based provision of loans to students had effect on stress for those who did not have good grades, those who did not pass if they face stress because of not getting the loan based on your merit-based criteria. That is the only question I have from online, but those who have questions, I see a hand here. Colleague from Uganda, can you bring the microphone to him? Any other? You can raise your hand, please. If there's another person with a question for the panel. Are you hungry? You don't, I think it's a very interesting discussion, and of course having two key leaders from the higher learning institution, the perspective of the institution is very important when it comes to also students related issues and financing. So maybe we can also reflect on that. The microphone to the front.
Yeah, thank you so much, moderator. I just want to join others in thanking our colleagues from COSAF for traveling all the way from Korea to here. Thank you for sharing those very good insights and great efforts you're doing in terms of uplifting higher education. My question is simple. One, I just wanted to learn from you the growth enrollment ratio in Korea, and of those that apply, what is the percentage intake in terms of success rate? Do you give all those that apply their default rates in terms of repayment? And if they are, what are some of the sanctions that you within your law to ensure that you optimize recoveries? Thank you.
Thank you very much. Any question? Maybe complementary to any lady who would like to ask or to comment as the last one for the entire conference, maybe. And then we oh, there's a gentleman there. Karib-san. Pass the mic quickly, please.
Thank you very much, Mr. Moderator. And first of all, I would like to congratulate. The presentation is very clear also from COSAF, and there are a lot of things to learn out of that. My only question was on the e-learning. I haven't heard it being mentioned anywhere. Is it effective in terms of considering e-learning on higher education financing as an example in South Korea? Do you have any experience on that, financing e-learning? Students who are actually pursuing e-learning, electronic learning, or distance learning.
Online or e-learning? You are financing schemes towards those who are receiving their training online or by distance or electronic way of learning. You got it? Thank you. So no more hands, no more questions. So I'll allow, okay, there's one there, Karibu.
Thank you very much. My name is Kelvin John, President of the student organization, Tanzania Public Service College. I want to know how Korea collaborates with the Tanzania Central Bank or commercial banks in order to address obstacles of the students in the universities. Thank you.
Thank you. So the collaboration, maybe you can talk about the anticipated collaboration with our loan board here as a way of looking at how we work together to share experience maybe. Is that okay? So I will invite you to respond, and then I'll go back to my panelists for their final word so that we can conclude this session. Please.
To start with the first question, it was like whether students are stressed or not stressed, depending on whether they don't get the merit-based scholarship. And to answer that, most of the scholarship, I mean like government grant in Korea, it's need-based. So majority of students get the need-based scholarship, which is called government grant. And other than the students who get the need-based, I mean, need-based is based on the family income level, so we support the needed students first. And if the students, like, for the merit-based scholarship, it's the students who's mostly from, like, rich family, so they don't get the need-based scholarship. So to answer that question, because most students get the need-based scholarship anyway, they don't get that much stressed out of like the reason that they didn't get the merit-based. And for the second question from Uganda, what was the question, by the way? Like, you've asked about the percentage of, can you clarify the questions for me? Is it okay?
Can we have the mic to the front, please, quickly?
It was about like repayment, so I couldn't get the purpose of the question. So can you clarify again?
I had three simple questions. One, the growth enrollment ratio, the learners in the age group who are at the university or tertiary institutions. Two, those who apply, do they all get loans or there are those that don't get? Three was on repayment. Are there any default rates on repayment? And whether I wanted you later to mention the sanctions within your legal framework on default, if any. Thank you. I hope I'm clear. A moderator, if I'm not clear, you can try to put it more
I think
clearly.
you got the three questions well?
I got the second and third question. Second question was like, if students apply, how many students get accepted by the loan? And the third one was the repayment rate, right? So like whether students actually repay the student loan or do they don't, like...
You can handle those ones. Thank you.
Okay. And okay, so about the second question, most of the students get the loan once they apply. I mean, like, our system in COSAF is 100% digitalized, so they apply for student scholarship and student loan at the same time. And as the name indicates, scholarship is giving out the money, and student loan, they have to repay. So, like I've said before, we support the needed students first. So if the student get the scholarship, they have enough money to get tuition. And if they're not available to get the scholarship, they get to apply for the student loan, which is providing tuition for low interest rate. So it's like either they apply, they get it. Like if they don't, I mean, like, except the cases that they don't pass the like very minimum criteria of like credits and their grade, they get it. So, and I hope that can be answer for the second question. And third one, we try hard to get repayment. I mean, we want to recover the student loan, but there are some like situations that for example, like income contingent loan, it's like student has to repay once they like get a job, right? But also in Korea, low employment rate is also the problem. So in case of those problems, student like doesn't have ability to actually repay. So we have several programs to support those, and maybe Con will support the answers.
And I understand you asked delinquency rate or default rate, right? So we divided the delinquency rate into short term and long term. The short term is under 6 months delinquency period. I think the rate is very low. It is about 2% delinquency rate. And default rate is last year, about 3%. Is it clear?
Are you happy with the response? Thank you.
And about the third question, I think it was asking about the efficiency of supporting e-learning. So, like we have challenges in Korea. First is low birth rate, as the president of IFA indicated. And the second one is like aging problem. So, like COSAF started from supporting high education, which is like university or college students, but we are expanding the scope of like assistance to lifelong learning, and the e-learning is part of lifelong learning. So we are expecting the efficiency to support students, not only students, but also like everyone to receive some kind of education. And we believe that education like functions as like actually functioned as like the basis of dramatic Korean development. So yeah, that was the answer for third question. And fourth question was asking about the collaboration with like Tanzanian government or other institutions. Like so far, COSAF, what COSAF like supports is for like supporting Korean students, like because we are part of government, like, and our money comes from government budget. It's not enough to support Korean students so far. So, but as the time passes and globalizations, we are like expecting and hoping to support other international students as well. And I believe that in the future, like I don't know when, but like some future, we get to support international students, including like Tanzanian students studying in Korea as well. And when that comes, we believe there are like various areas to like have collaborations with. I hope that can be the answer for the fourth questions. And yeah.
Thank you very much. Now, let me invite again Professor Nelson, DVC Research from University of Dar es Salaam, for your final reflection, and if you have anything to add from your earlier discussion. Karibu.
Thank you so much. I would like to compare the two models from COSAF and ours in terms of scholarship programs. If you look closely at our scheme, we primarily support loans. When I look at the slides presented there on their models, in terms of scholarships, they deal with extensive scholarship programs, including merit-based, need-based, and specialized scholarships for fields of engineering and science. I speak this because I think if you want to drive and move to the Tanzania's Vision 2050, which aspires to transform our nation into high-income economy through industrialization, human capital development, and inclusive economic growth, we need to strengthen the scholarships to address the needs of the government. Thanks to the Minister of Education for establishing the Samia Scholarship. But the way I see this scholarship, if it's not protected, for instance, the minister changes and it's not protected by the law, and the government changes, maybe in the future it might not be focused as a priority. So I recommend that as we propose the review of the Parliamentary Act to protect this kind of initiative, which is so crucial to the drive towards our vision. I'll give an example on similar initiative at the University of Dar es Salaam. In 2017, the council established a fund for scholarships that actually the university gave seed funds, but it was open for private sector, for government institutions, for bank systems, organizations, and the individual to contribute. Ever since it was established, we have got support of like about 400 millions for all these years, and the banks and the organizations, the institutions, they are supporting students by scholarships based on their interest. But it is really protected by the Baraza, by the council. So the vice chancellor cannot come, a new vice chancellor, and say, I don't want this one, because it should go through the mechanism through which it was established before, so that you get it out. We have similar establishment like a merit scholarship at the University of Dar es Salaam, which started 2019, and this has supported like 260 students ever since, but is also protected by the council, because it was established under the council machinery, and ever since it has supported more than we set the budget of like 470 million TZ shillings per year, and this money must be set aside to support that kind of students, especially in STEM subject. And the purpose of this fund is to retain students who perform well in those subjects so that they can be future professors. Thank you. That's my reflection.
Thank you very much, Professor. I think you highlighted a very important domain also that higher education institutions do have, and maybe specifically for the University of Dar es Salaam and others which do not have this kind of an arrangement, they can try to innovate. They have their own internal arrangement to mobilize funds to support students through different sources, but they also have their own scholarship scheme, and you could see 260 students since 2019 is not a small number. So these are the commendable initiatives to complement the efforts of the Loan Board to ensure that we keep more and more opportunities accessible to students using different kind of instruments and indicators. And now to you, Professor Kusiluka, your final word and the reflection and the conclusion.
Yeah, thank you very much. One lesson I've taken from the Korean experience actually is about concentrating talents. You see, they have a lot of facilities there which are intended for developing talents. And the University of Dodoma currently, what we're doing, we're putting up a policy for talent retention. And we're not focusing only on hard sciences and engineering talents. We want all types of talents. Because, for example, in Tanzania currently, the performing arts and related, the music industry and whatever, we have not actually captured them very well as talents. Among the richest guys in this country are actually musicians. But as universities, as a nation, we have not actually found a mechanism of producing more of those. So our aim with that policy is to retain such talents. Now, another thing which I thought is important for us to reflect on is that getting loans from public money, we should appreciate that even the poorest person in this country is actually contributing to that one. And therefore, it is important that we respect that privilege. it is not a right. If it were a right, everybody would have got a lot. Because it is a privilege, it is important that we appreciate and use it properly. And this is for my students. But also it is important that while we aspire to develop global citizens, we should also think about developing Tanzanian citizens. Because I think when we look closely, the global movement is kind of taking away some of the basics in our societies and institutions. And what we are seeing in the world now, it is obvious that even as much as globalization is good, you still need to have some domestication of certain things which are going to identify you. So that is important. And we are coming from an Ujamaa background, but we are not very much philanthropic. Otherwise, we wouldn't be having some of the poorest students not being able to study while we are here. We lend through loans, and we have some money and we could contribute. I think this is a culture which, as a country, we have to start actually bringing back. It was there, but it's kind of going away, and we are becoming more individualistic than becoming patriotic Tanzanians. And I think if we lose that one, we probably will have lost a lot. And another good thing from the Korean experience, when I was looking at the presentations, is about ethics for those who get some of these scholarships, especially for science and technology. It is important that when you develop scientists and you invest lots for them, they also have to be conscious about the ethical requirement about their respective countries. They should know that this investment is intended to make us actually develop our own countries. Thank you.
Ethics and returning back what you got from your government, very important, Professor, is a very good concluding word. Now I'd like to invite now Dr. Machai to also say a final word for my panel so that we can wind up. Thank you.
Hello? Hello? I think the key takeaways, one is on resource mobilization. We need to check the laws governing the student financing authorities. For us in Zambia, we discovered we were not allowed to do that. Until now, when we are repealing the act, this is being addressed. Resource mobilization is very key. Talent development programs being done by COSAF are great. We need to learn from them. And three, international collaborations are very important. We have MasterCard Foundation. How are we working with them to get resources for our students? So overall, I think there are quite a number of things that we need to learn from our colleagues, both in Malaysia, South Korea, and Brazil. They may have also very unique problems, but for us, let's get on to understand the resource mobilization techniques, and also law reform is very important. We need to check under which laws we are operating in. Some of them could be restrictive. We need to beef up our laws to allow us to apply on the financial markets to raise money. Thank you.
A brief concluding remark. Ladies and gentlemen, let's clap again for this very wonderful panel. It was the last one, but very important as well. Thank you very much for being part of this. I thank you and now invite you to go back to take your seats. Asanteni sana. Ladies and gentlemen, we are approaching the end, but we still have closing. The group photo again, I'm reminded. Asante sana kwa picha. Tunaelekea ukingoni, tutakuwa na hafla ya kufunga mkutano wetu. Naomba niseme jambo moja kabla ya kwenda kwenye hafla ya kufunga. Ndugu zetu loan officers, nafahamu mko katika chumba hiki na bodi ya mikopo inatambua umuhimu wenu nyinyi kama wadau na washirika katika swala zima la utoaji wa mikopo ya elimu ya juu. Naomba wote loan officers pale mlipo, naomba msimame. Loan officers, jamani, tuwapigie wenzetu makofi. Ni muhimili muhimu sana wa mchakato mzima wa loan kwa wanafunzi, na wamekuwa ni msaada mkubwa sana kwa bodi ya mikopo, lakini pia kwa wanafunzi ambao ni beneficiaries wa mikopo. Lakini naomba mketi. Kwa umuhimu, naomba pia mwenyekiti wenu Bi Frida Malia kwa upekee naomba asimame na yeye tumtambue. Mwenyekiti wa loan officers Bi Frida Malia, upo? Tumpongeze na yeye jamani, asante sana. Tunawashukuru sana kwa kushiriki katika mkutano huu, lakini pia kwa huduma yenu ambayo mmekuwa mkiitoa. Baada ya kusema hilo, sasa tunaelekea kwenye zoezi la kufunga ambalo tutapewa utaratibu na viongozi ambao watalisimamia. Kwa hivyo naomba nimkaribishe moderator mwenzangu Dr. Peter Mmari kwa ajili ya kuliongoza zoezi hili fupi la kufunga, lakini pia nitumie fursa hii kutoa shukrani kwa bodi ya mikopo kwa kunipa dhamana ya kuwa sehemu ya mkutano huu kama moderator. Asanteni sana, na wote washiriki wa mkutano huu naomba niwashukuru kwa ushirikiano wenu. Asante. Karibu Dr. Mmari.
Thank you, Dr. Makundi, for being useful and instrumental in the operationalization of this conference. So, first of all, I want to apologize for being between you and your lunch. It is very circumstantial that it has happened so that, but I want to promise you that whatever is ahead of us will be completed within 10 minutes. So I'll try my level best to ensure that at around 2:30 to 2:35 we are getting out of the room. So ahead of us we want to do only 3 things. One, I'll invite a representative from HESB, who are our hosts, to give a thank you note for the delegates and all the participants. Second, I'll invite our policymakers, and this is the Ministry of Education, to come and do the same. And lastly, we will give a special appreciation to our foreign delegates by way of handing certificates to them. So may I call our Director for Finance and Administration, Mr. Lihuruma Lema, to come and give thank you note on behalf of HESB. Can we put our hands together for our Director? Director Lihuruma Lema is responsible for managing the finances at the Loans Board. So all these discussions are very key and relevant for him. So you're welcome.
Na wasalimu kwa jina la Jamhuri ya Muungano wa Tanzania. Good afternoon, ladies and gentlemen. As a moderator said, my name is CPA Lihuruma Lema, Director of Finance and Administration from Higher Education Student Loans Board. And I'm standing here before you just to say a word of thanks or appreciation from the HESB. First and foremost, I'd like to say thank you to God, because we started it as a management, as an idea of this event. But from an idea, then we managed today to make it happen. But also, we'd like to thank our board of directors for the good directive that they have been given us through this event. We have been discussing a lot, and they have issued a very substantial directive in order to make this event happen as you see it today. So, also as a management, we would like also to say thank you to our board of directors for being very cooperative and also fully participating on all these events, starting from launching of clinics at Dodoma all the way up to today. We are very honored and say thank you for your participation. Almost more than 99% they have participated, the board members. So we really appreciate for that one. But also we would like to say a word of appreciation and thanks to our Ministry of Education, Science and Technology. They've also been very close to us and very cooperative to issue some directive. I remember it was sometimes last year when we started presenting to them, to the management of the ministry, about the idea of how the event will going to be, all the series of events, and they posed to us a very good, significant input, which we have used them and incorporate them and make it happen as you see it today. So we really appreciate Ministry of Education, Science and Technology. And specifically also we would like also to thank our Professor Msofe for your coordination between the HESBU and ministry. And also Professor Osea in case when we are not around. So he assisted us a lot. But also would like to say thank you to our sponsors. Honestly speaking, sponsors, they have done a big job. They have supported us. What you see here, more than almost 80 to 90%, it's our sponsors, the one who have financed us financially. So we really like to thank you, starting from those financial institutions, higher education institution, the public one and the private one. You have supported us a lot, but also private institution, public institution as well, and international organization. So we really thank you and would like to say thank you for that one, your support. But also would like to say thank you for all participants and dear delegates. As you have seen, we have delegates from abroad, Brazil, our brothers from Brazil, Malaysia, South Korea, South Africa, Zambia, Uganda, and Kenya as well through visa. So we really appreciate and we thank you. And we wish you all the best as some of you will be leaving maybe tomorrow and the other you'll be staying, enjoying the beautifulness of Tanzania. So you're welcome and enjoy. But also we would like to thank delegates who are locally, reside from countryside, especially starting with leaders of student organization and all the students who are here. Please may you stand up just for appreciations. Thank you very much for your participation and we really appreciate that one. But also we'd like to thank you loan officers, all loan officers. These have been very fruitful and very supportive. They are like our extended hand to the institution. So we really appreciate and recognize your presence. But also we appreciate the presenters and the panelists who have taken their time to prepare the very nice and good presentation, very fruitful one. And we believe we are going to take a lot of input from you, and we really appreciate a lot. But also I'd like to appreciate our moderators for handling the discussion very well. Dr. Mari as well as Dr. Makundi, we really appreciate for that, for your service. But also the other group that we would like to say is all service provider. We really appreciate for all service provider for the good work that we have done, starting from the one who have been hostess for the venue, JNICC management, but also the decorators, Hugo Domingo, and the others like cameraman, people of media who has been able to make us to be live through our HESBU Instagram page. We really appreciate and say thank you for that one. But without forgetting, we'd like also to say thank you to all HESB staff for the good job that you have done. It has been, you have started all the way, starting from the clinic side, all the 7 regions that we are handling. You have played your level best to make it happen. And finally, some of you have managed to travel all the way to be here to the closing session, so we really appreciate. Also, we really appreciate also through this is the good leadership of our Executive Director, Dr. Bill Kiwia, through guiding us in every moment, every time to move properly and to see things happen like the way they are today. But finally, we as HESB would like to assure you and give a commitment for the directive that has been issued by the government through Honorable Prime Minister Kassim Majaliwa, the directive that he has issued during his guest of honor yesterday. We have taken it. Also the directive that we are issued by our board chairman and the ministry as well. We have taken them, and we promise and be committed to ensure that we are going to work on it, to put in our strategic plan, to ensure that we attain value addition and positive impact, innovation, and deliver a good service to our stakeholders. Having said so that, thank you very much, and we really appreciate for your participation, and we wish you best of luck as you are going back home. Thank you very much. Jamhuri ya Muungano wa Tanzania.
Thank you very much, Director Elihuruma Lema, responsible for Finance and Administration on the Loans Board. Now I call Professor Peter Msofe, representing the Ministry responsible for Education, Science and Technology. Professor Msofe is overseeing the Loans Board in terms of policy matters. So he's the right hand of we are implementing the policy, he's setting the policy. So you're only welcome to give your remarks.
Good afternoon, ladies and gentlemen. I did not hear your response, so I'm going to repeat it until I hear a response. Good afternoon, ladies and gentlemen. You're getting better, but we're not there yet. Good afternoon, ladies and gentlemen. That's much better. Thank you very much, Dr. Mari, for welcoming me. I stand here on behalf of the Minister of Education and Science and Technology, on behalf of the Permanent Secretary, who was supposed to be the one officiating the closing. Now, I wanted to thank a lot of people, but Elihuruma did all of that, so I'm not going to repeat the thanks. But I want us, when we leave this majestic hall, having spent 2 days of brilliant and very, very stimulating discussions, I want us to carry home 7 messages. There were many, but I picked 7. Number 1, 20 years for supporting student education in higher education is a long time. If you don't believe me, I've seen ministers, actually a prime minister for that matter, being part of the system. I've seen a banker sitting right there in front. I've seen a professor, myself, and Joel. I've seen judges who within those 20 years benefited from the Loans Board and rose when the occasion came to whatever position they are now. So 20 years is a long time. So when we plan for the next 20 years, we must be very specific because we have a long time to come in 20 years. Number 2, we are still in business. The projections that Dr. Chegere gave yesterday, the projection that we saw from the comprehensive review on form and function of the loans board as it is now shows that we are still in business for many, many years to come. So if you were planning to quit the business of student financing, you are doing it at the wrong time because the business is still open. Number 3, we are challenged a lot that this money that we have been spending on student loan for the past 20 years is either about to go bust or will not be enough anymore. So we are challenged to look elsewhere. So wherever you are sitting right now, if you are part of this deal, remember that we need to think of how to bring new money into student financing. The old money that we spent for the last 20 years and probably the next 5 years is about to go bust, is about to drain out. Because, as I said, the projections are good, so we're in business. But if you're in business and you don't have money, the business will go bankrupt. And you don't want education to go bankrupt. Luckily, number 3, we have heard what our friends are doing in Korea, in Malaysia, in Brazil. We have also examples from other countries like Ghana who they are not here. But we already have examples of how new money can be brought into the equation. So think about our own ways of bringing new money into the equation. What we heard from the others is just a guideline of what we can do, but we know our situations. We know that we can still garner some money from elsewhere, bring it into the question of education financing. Number 4, there's a need to rewire our thinking into saving for education. I heard Professor Kusiluka saying that, and I heard others also saying that our wiring at the moment is not very much towards saving for education. Our wiring so far is not so much as contributing to education. So we need a little bit of rewiring. And I think the loan board as it exists today can be at the forefront of helping the public understand that education is expensive. Education requires deliberate effort to finance. So rewiring is something that we need to really look into. On rewiring, it also brings us to the fact that a loan is a loan. There's a principles on getting a loan. You get a loan when you need it. So you request for the loan when you need it. You spend the money the way you asked it in your proposal. And finally, you have to remit. You have to return back what you borrowed. So that should also be part of our rewiring. Because as I said, I gave my little experience, I was talking to young people, they told me, this is our money. Hii ni hela yetu. So that's what they thought. But they forgot that the hela yao, or their money, actually came from the peasant who sold their crops and paid a little bit of tax that was collected and given to them as a loan. Number 5, I said there's only 7, so I'm now on number 5. So only 2 to go before your lunch. Number 5, we need to create an environment to up the private sector's appetite in supporting education financing. We have not been very good at that. I thank very much those organizations that already have jumped in. I will mention NMB. There's still 200 billion somewhere which is ready to support education. CRDB, I know that they have programs. I know there are many other people who are doing that. But I think the appetite is not still up there yet. So we need to design something. I don't know, word of encouragement, I don't know, begging. I am at a loss at the moment, but I know that with this, all these heads in this room will be able to create an environment that bring up the appetite of the private sector in supporting or in financing education. But then there was one, the last two I added when the last panel was sitting here. So it means something that came from this last panel. One very seasoned academic leader said, what about if we start a bank that is specifically for financing education? Citing that there's actually a bank that supports agriculture. And agriculture is, is quite difficult to support agriculture, but there is a bank that is specifically for that. Well, we had one for housing which died, but I don't know if it was killed by people not, the rewiring part of that question. So probably we need to think about shifting that load from the loans board, which is sitting there waiting for the government to disburse, and a bank or an institution that goes out there to look for money and spend the money not only for academic purposes, but also for something else. So I took that from here, and that's my point number 6. And the last one, again, it came from the final panel. It's about what institutions can do to reduce the burden of student financing from government or other sources. Institutions can actually do more. I heard about the University of Islam is offering some scholarship. That's something that needs to be commended, but they can do more. I don't know about other universities, but universities can actually do more. The alumni that came from those universities can support other young people to study if they are carefully brought in to be part of the equation. So, to me, this was a very, very successful occasion to mark the 20 years of HELSP. To me, 20 years has shown that you can feel like 14 of the Benjamin Mkapa Stadium with the people who have been granted loan. Because we're talking about 800,000 or so. That's like Lupaso Kuminane at a go. They are somewhere out there making this nation move. So we should actually clap for ourselves for that. But let's us clap more for the loans board, because without the strict adherence to the rules and guidelines and regulations, we wouldn't be here where we are. So I will ask Dr. Billy to stand on behalf of the board to receive the clap from the rest of the group on behalf of the loans board, the board of directors, and the management. Finally, I interacted clearly on 3 occasions with the loans board. Number 1, as a receiver of a loan, that was in 1994 going forward. And there, I received my loan, and I want to assure you that I already finished my repayment, and I have my certificate to prove that. But I also interacted with the loans board when I was the director of undergraduate studies in one of the biggest universities in terms of numbers, although it is young, University of Dodoma. And there, I learned that the small money that you think are going into student pockets, they do a lot of things. I had young people who will support their mother, their young brother and sister using the same boom that everybody else smashes on weekends. I saw young people's faces change when they realized that their appeal to the loans board has been accepted. I've seen young men cry because their appeal has been accepted, now they were going to receive a loan. But I've also seen some guys who really use that money as, an extra. So they will do whatever it is to finish that money as quickly as possible because their parents were supporting them in one way or another. So I've seen how this money has changed lives positively, but I've also seen how this money has been misused. That's why I was saying, if we drum this enough that it is known that you only take a loan if you need it, we reduce the number of those who are taking it for just smashing it. And finally, I'm interacting now with the board as the Director of Higher Education. So I am now talking to them from the policy level, and you are working very well. So I thank you once again, and thank you everybody who was here, loan officers, vice chancellors who are still here today. Thank you very much. And the ministry is still committed to ensuring that every student, every person who needs to go to the university goes there, because that is what our new policy is saying. We are not leaving anybody behind. So I wish you safe travels to wherever you go, and just remember that we are still in business. Thank you very much.
Thank you very much, Prof. Sorry, Professor Msofe. I don't want to disturb you anymore. I'll wish if you can have a seat here, because for our foreign delegates, we'll just handle your certificates later. But I wanted us to have a group photo for all of the foreign delegates. And for that photo to be colorful, may I call our CEO, Dr. Bill Kiwia, to come in front, as well as our board chair, Dr. Rukaya, to also come and join. Also, the president of IEFA to come and sit. And then behind them, I'll ask all the foreign delegates to stand so that we have this memory. After this photo, we'll have another photo for long-serving HESBU staff. I believe, Secretariat, you are ready. Jonathan, I believe you are ready. So, Professor Kusiluka, you can feel. Oh, we are good. We are good to go. My apologies. So we are going to have this photo for all the foreign delegates that have yes, you can proceed. As they are taking the photo, I want to let you know that the certificate for your participation in this conference are accessible online, and there have been a way to access them through scanning or getting into the portal, but the Secretariat can also help you to access the same. We also have some appreciation certificates to our sponsors, but also key players, and those ones will be handed over in your offices. So we have a team who will do that. So I believe you are okay. Thank you very much, and you can get back to your seats. For those who are seated on the, I wish that you remain. There's another last photo. Prof, sorry, my apologies. One more last photo for his long-serving staff. Please, can I have you here in 2 minutes Are they ready? So you can read them. You can read them.
Patricia Ligate Sande, please come forward as we mention your names. Jessica Hezron Sato, Crispin Matem, Oscar Po Kashinje, Joyce Misalaba, Hidaya Karunde, Mcharo Philip, Neema Balati, Gertrude Alphonse, Daudi Elisha, Emmanuel Mtavangu, Sophia Saidani, Annette Bugingo, Patrick Elia Shaw, Balindile John Mwaigomole, Simba Mchunga, Dorica Salvatori, Marcelina Msuni, Octavia Selemani, Julius Bura, Honest Mlai, Edita Otwe, Usama Choka, Anthony Oko, Philbert Temba, Rukia Semoiko, Christina Chacha.
We have only 1 minute, so I guess you are already here.
Changala, Alice Barongo, Edson Mzarifu, Sarah Fihavango, Neema Nitume, Saleko Mandara, Godfrey Chawe, Rosada Furia. Yeah, the rest, if you know that you have served more than 10 years, you can please come forward.
So this is a photo for long-serving staff. We'll have, the CEO will have another mechanism of appreciating their service in the institution, but for now, we appreciate by having this memory photo for their service in this noble institution. So, thank you, thank you, thank you. And our last photo for the day and last activity for the day is the photo of ministry management and HESB management. Please, I need you on stage in 1 minute or 30 seconds, please. 30 seconds to 1 minute. No. And so our lunch is served in 3rd floor. So you are welcome for lunch after this photo in 3rd floor. And for the foreign delegates, your lunch will be on the 2nd floor. And they will be accompanied with our sponsors as well as HESB and ministry management team. There's a special request for the VCs present to also join this photo. I see like 4 VCs in this room, so wherever you are, please join this photo. Apologies, these memories are very rare to get these all people in one room. It happens once in after very many years, so you bear with me. Yes. Then, Professor Kusiruka, you are lucky that you are representing all the VCs in this photo. Yes. Lastly, I want to thank you all for your support to the panelists and the moderators for being attentive and active. Can we put our hands together for each and every one of you for what we have been able to gather for these 2 days? And I welcome you to lunch. There are ushers out there that will serve you and direct you where you can get your lunch. For our foreign delegates and management and sponsors, you'll be served in second floor. Someone will take you there as long as you get out of the room. Asanteni sana.
Serikali yetu pia hongera.